morning, good afternoon, and good evening to the rest of you. We are back for another episode of Bitcoin Magazine Live. As I, your host Q, and I'm coming to you yet again from my mother's basement, and I'm joined by my co-host P. How's it going, P?
It is going fantastically. How's my mic? Am I too hot? Am I too cold?
I think you should share with everyone what the name of this mic is.
Oh yeah, for sure. I was informed that by Aaron that this mic, which is the Electro Voice RE20, is known as the elephant dick in Germany. There's two mics that everybody uses. There's the SM7B, and then there's this one, which looks hideous but sounds great, and that's where it is. So I'm speaking into the elephant dick.
We are also joined by a special guest today, a colleague of ours at BTC Inc., but also a guru in the housing markets, none other than George Mekhail. George, how are you doing today, man?
I am feeling good. It's good to see you guys. Thanks for having me on.
Dude, thank you for joining us. We wanted to, start things off maybe talking about the conference. We have a special announcement that we are actually sold out of fiat general admission tickets. George, I'll kind of let you talk a little bit about that.
Yeah, so basically at the end of Bitcoin 2022, we started our pre-sale for Bitcoin 2023. GA tickets were $249. Those are now sold out, as you mentioned, if you're paying with fiat. But if you do poke around the site, you can, if you're a Bitcoiner, pay with Bitcoin. Actually, anyone can, even if you're not a Bitcoiner. It doesn't matter of fact. Just use Bitcoin and you'll still get that price. Prices are going up on Friday. So definitely grab your early bird ticket before those ticket prices go up Friday at midnight. Also, whale passes are still available at that $5,000 mark. But those are also near sold out as well. So don't miss out on the lowest prices. These are current prices are 77% off what they were at the door at Bitcoin 2022. So by far the lowest deal you're going to get.
And just as a reminder for everyone, ticket prices are going to be going up on Friday. George, I'm going to put you on the spot a little bit. Can you maybe share how much more people are going to have to shell out if they wait just 48 hours?
Yeah, so the GA tickets are going up to $349, so up by $100, and whale passes are going up by $500. So
you've been warned.
Friday. Yep.
You've been warned. Come join us at Adult Disney or Bitcoin Disneyland. We can't. I guess we can't say, but all the announcements will also be coming out next month as far as when it will be, technically where it will be, and when it will be. But look, most of you had to travel to Miami. Most of you had to book an Airbnb and book a flight. You're probably going to have to do it wherever we put it next year anyway. So you might as well get your tickets as cheap as they can be now. So, P, any final thoughts on the conference?
No, I mean, no, and yet I'm still talking. Yeah, I mean, every year that we do the conference, it builds and builds. It continues to be the most relevant, the most significant, the most Bitcoin conference in the world. And we set records and made history this year. And next year is going to be even more incredible. The scale is larger, the scope, the quality of the conversations will be even better. It's going to be fantastic.
The number of tickets that we pre-sold is pretty wild. Like the people just rushing in to make sure that they get their tickets before ticket prices go up, and doing so before a venue or a date has been announced. It's been pretty remarkable to watch. So still have a chance to lock in that GA ticket, $249 with Bitcoin.
Yeah, and people love to complain about the price of the tickets. They do get high. That's how we finance this incredible event. This event was, when I talk about the scale, you should also hear like cost. It cost us an incredible amount to do justice to what this event is and will be and was. And we try to give people who have a low time preference the advantage by offering these tickets early on. So don't be a high time preference bitch. Buy your tickets now, and don't be one of the people that's like, oh, but they're so expensive later.
Yeah. Oh, and one more thing on this too is a lot of people have been asking about like promo codes and discounts and things like that. Yo, that's $249. There's no discounts. This is the lowest it's going to be. So if you're holding out and you're like, oh, maybe there's going to be a promo code that they announce or whatever. Yeah, we will, but that's going to be like when prices are $400 or $500. So this is going to be the cheapest that you're going to get Bitcoin 2023 tickets.
My
Have
promo
been
code, George.
warned.
Yeah, I last year my promo codes were HFSP for Have Fun Staying Poor, and also 69420. This year, George, I'd like to pre-reserve the promo code. I am a high time preference bitch. If that's cool.
Let me write that down.
Yeah, it'd be great. Thanks, man.
Yeah, but YouTube team definitely needs to get a much better promo code because our janky one last year still I think we finished number 1 or number 2. Is that right, Mr. George?
Because we're up there for sure. No, we'll do it. We got you.
I also want to ask you because you had the opportunity to actually speak at last year's conference, and that kind of is going to help us segue into what we're going to talk about today. Do you want to maybe just share some thoughts both on the conference from about a month and a half ago and just generally, as well as your experience on stage?
Yeah, definitely. So I had the privilege of moderating a panel about pristine collateral and Bitcoin mortgages. And I was joined by Sam Abbasi from Hoseki, the CEOs of Milo and Ledin, Adam Reeds and Joseph Rupena, as well as I'm spacing on his name. Help me out, P. The fourth guy. The worst. He was in commercial lending, which isn't my world, so I got to know him the least, unfortunately. But he was great as well. So the whole conversation was solid. We were talking about the emergence of this new product, Bitcoin mortgages, and really had a great conversation. I encourage people to check it out. It's on YouTube. The thing that was interesting to me was how many people mentioned Bitcoin mortgages from the main stage. So we were on the enterprise stage with this panel, but it just keeps coming up, right? People keep asking this question of, as Bitcoiners become more wealthy, the number one thing that they're going to want to purchase is real estate. So, and they're going to want to do it without having to spend their Bitcoin. So who is providing that product? And so the guys on stage got to share a little bit about the products that they're working on and how they're relevant to that emerging space. But I think, by the time we hit next year, this is going to be an even bigger conversation. And it's just going to continue to grow and take the forefront as more and more people are inquiring about, how do you do this? How do you buy real estate using your Bitcoin and using it as collateral without having to spend it? And maybe potentially down the road, this product doesn't exist yet, but without having to actually give up custody of your coins as well.
And it's so fascinating too, as the years have gone on, you're starting to see more and more different ways for people to use their Bitcoin back in the fiat world and fiat system. I'm genuinely curious because, some people are a little skeptical on using their Bitcoin to then go back into a more fiat structured system. What or why are you not concerned about that?
I mean, I think it really comes down to a different type of borrower profile. So if you're in the fiat world and you're going to apply for a mortgage, it's a very specific set of criteria that you have to meet in order to qualify for a mortgage. And a lot of Bitcoiners and a lot of people in general who have a significant amount of wealth don't fall into those parameters. And so they're looking for a different way to basically leverage their wealth to acquire real estate. And so I'm not sure if that exactly answers your question, but I think it's just important to recognize that there are these two different types of borrower profiles. And with Bitcoin, what I like to say is that Bitcoin is your credit worthiness, right? I would like to see a Bitcoin mortgage product that doesn't rely on your FICO score, doesn't rely on your W-2s and your tax returns. And, if you've ever applied for a legacy mortgage, like, it's ridiculous the amount of stuff that they ask you for just to get you qualified for that loan. Whereas with Bitcoin, if Bitcoin can exist in a world where it is your credit worthiness, I think that's sort of what I'm really looking forward to. Edward Rodriguez, that's his name. Sorry.
There we go. There we go.
Sorry, Edward. Yes, Edward Rodriguez. And yeah, we had a really good conversation. Again, I encourage you to check it out.
Only because, as much as I like to say I pay attention to the housing market, I have no grasp or understanding as someone who literally lives in my mother's home of what owning a home, what goes into owning a home. So can we start there a little bit of just maybe walking us through not necessarily requirements, but the steps it takes and all of the hurdles that are already in place to just owning a home in the traditional sense?
Definitely. So the first step is to get pre-qualified or pre-approved. And that requires you going to a mortgage lender and, again, giving them everything and all the information, I mean, you think KYC is bad. Getting a mortgage is like KYC on steroids, right? So the first thing you're going to do is fill out a mortgage application, which is like a 5-page document. It's usually all online now, but all the standard stuff that you would apply for any sort of credit is the starting point. So they're going to run your FICO, and they're going to ask you how much money you have in your bank account. They're going to ask you how much of a house you're looking to acquire, how much you're going to put down. And then they basically run you through their system. So if you're looking for a home that's under 500 and I think $530,000 right now is the new Fannie Mae Freddie Mac threshold, you will fall under those Fannie Mae Freddie Mac guidelines. And what that means is the government is going to back these mortgages, right? So they're going to buy it from your lender, and that's really what props up the housing market. And that's a whole other conversation that we don't need to get into, but suffice to say, a lot of homeowners fall into that category of what's called conventional or conforming loan limits. Once you get over those loan limits, then you fall under what's called non-conforming, or sometimes called jumbo loans. And those don't follow Fannie and Freddie guidelines. They're a little bit harder to qualify for. They'll have higher requirements for FICO score, usually higher down payment requirements, and so they're a little bit harder to get into. So you complete your application and you submit it to your lender, and now they're going to want supporting documents. So, okay, you said here in your application that you have $15,000 in your checking account. I'm going to need a bank statement to back that up that shows that $15,000 is in there. And you also told me that you work at BTC Inc. I'm going to need your most recent pay stubs as well as your most recent W-2s. Oh, by the way, can I get your tax returns as well? You submit all these documents. Now, a good lender, and this has become more common practice in the last 10 years, ever since the housing crisis, is going to submit all that paperwork to an underwriter ahead of time. So an underwriter is going to look at everything that you've submitted and check it against their guidelines and make sure that you have what it takes to qualify for this loan, so that you're not out making an offer and then 30 days down the line you find out, I actually didn't qualify because my FICO wasn't high enough, or I didn't have enough money in the bank, or whatever else. And so once the underwriter looks at your file, they'll issue you what's called a pre-approval letter. You'll use that letter to go then shop for a house. Okay, so most real estate agents won't even talk to you or let you make an offer on a home unless you have a strong pre-approval letter in hand. And you use that pre-approval letter to submit with your offer. And depending on the strength of your pre-approval letter, the legitimacy of your bank, and how much you qualify, usually like over the asking price, is going to make your offer stronger or weaker. And so it's a really important part of submitting an offer, especially in a highly competitive market where there's multiple bid situations. Real estate agents, a good real estate agent is going to filter out the garbage offers that are just like, oh, this guy hasn't even been pre-underwritten, or this guy just barely qualifies for the purchase price. And so once you do that, and hopefully I'm answering your question. This is kind of long-winded, but
Bro, I'm taking notes right now.
So once you go through that, if your offer is accepted, you're under contract. It's called mutual acceptance. So both the buyer and the seller have agreed to terms. You're under contract. Typically, it's about 30 days to get to the closing table. Now, you're not done yet with getting your mortgage. All you have is a pre-approval letter. Now, if your underwriter and your lender have done their job, then you've gone a long way. So you're almost there. But there's still a lot of things that need to happen. So the first thing that needs to happen is an appraisal needs to get ordered. So when a lender is checking your creditworthiness and whether or not you qualify to buy a house, they're looking at both you, the borrower, as well as the home as collateral. And so the appraisal is a big part of ensuring that they want to actually lend money to buy this house. So they send an appraiser out to the home. And the appraiser is checking on a couple things. They're making sure that the value of the home is in line with what you are offering to pay for it. And they're making sure there's no deficiencies. So if they go there and a toilet's broken, or the kitchen isn't complete, or there's some safety issue, they're going to call that out in the appraisal, and that those issues are going to have to be addressed before you can close on that house. All right, appraisal comes back, good to go. There's a few other
I got a question for you on that though. And maybe not the right person to ask, apologies, in the moment came to me. We're watching the housing market be insanely hot, which I do want to get into with you. But like in a market like this where people are moving so quickly and buying houses for so much over asking,
Mhm.
are you seeing that same process of due diligence on the tail end after an offer is accepted?
Yeah, I mean the appraisal process is very standard, and it's one of the most specialized parts of the whole process. Like you have to have a licensed appraiser come out, look at the home, make sure that it hits the valuation that you're offering. What's happening in the market right now, and it's starting to cool off a little bit, but what has been happening over the last like year or 2 years or so is with these multiple bid situations, people are asking way higher than maybe even what the appraiser is going to justify. And so that's usually fixed by the borrower coming in with the difference. Okay. So let's say you're buying a house and you offer $1 million and the appraisal only comes in at 800,000. Well, now you got a problem because the lender's only going to borrow up to the value. The $800,000 is going to be the valuation. And so let's say your loan is 80% of that. So now you can only borrow, I don't know this math, but like 650 or 625 or something like that. Again,
640K.
640K against this $1 million house, right? And so so now you're gonna have to come up with that extra 200K, that delta between the appraised value and the your asking price or your contract price. So it's definitely an issue. Low appraisals, and we're going to see that more and more now as the market softens. Low appraisals are going to become a really big issue, in my opinion. And so, does that answer your question? Okay.
Yes, in great detail, and I appreciate that. Um,
Sorry,
I want to
I nerd out on this stuff.
no, dude. This is why I do it. I'm genuinely curious, and I hope everyone who's watching the stream right now only sees P's face and doesn't see any of us talking.
Oh man, that's so funny. Bask in this glory. I'm testing out new settings.
I definitely think the Jack Sparrow look works, and I'm a big fan.
Thank
George,
you.
talk to us a little bit about like present market and what you're seeing pretty much since COVID or a general home buyer.
I didn't even finish the process.
Oh, you didn't even finish?
We're still at the appraisal, bro. There's still more.
Let's go. I'm not done taking notes.
All right, appraisal comes in, you're good, you got the valuation. Now you got probably another 15 days to finish closing. So again, taking this, let's say you buy this $1 million house, it comes in at value, you're going to put 20% down, a couple of the remaining steps. So in the background, your lender is working on underwriting your file still actually got to go through several different checks. You're probably going to have to submit 18 more documents to them along the way. Stuff's going to expire. They're going to have follow-up questions. You're going to have to write letters of explanation as to why this is on your credit report or why this large deposit is showing up in your bank account. It's crazy. They might call your employer. Actually, they will call your employer twice. They'll call your employer at the time of application. They'll call them right before you close. And then as you approach closing, the key window or the key trigger moment is when final closing documents go out to either escrow or your attorney, depending on what state you're in. And that means you're as good as done, right? When a lender has issued final closing documents, then you're ready to sign and get things consummated. And you bring your down payment check as well as the closing costs, so 200 grand and then some. And you sign your documents, and usually a day or two later, you're good to go. And the keys are turned over to you, as well as the title gets recorded in your name, and you are now the owner of that home. Boom. Okay, what was your next question? Sorry.
Jesus, that was a long process.
I want to make sure my mic isn't acting too crazy. Chris, can you give me a thumbs up? Or cool. So we're going to keep going like this, and I apologize for any mic issues. But present market is kind of nuts right now. You alluded to like sort of shady practices a little bit that's still going on despite like what we saw back in 2007 and 2008. As I mentioned, like we're seeing houses go for a lot higher than asking price. I'm curious just sort of what you're noticing in the markets right now or that you're paying attention to there that's catching you by surprise.
Yeah, so we have a really interesting dynamic right now that's, as much as we like to compare it to 2008, and there are certainly some similarities, there are a lot of factors that are quite different. So what's happening right now is we're seeing a convergence of a lot of different things happening. People moving to different states that are cheaper because they're now working remotely. So I think that's going to continue. So you're going to see some markets that are going to stay hotter than others. But we're also starting to see price drops, pretty much across the board. I'm watching, house values in my area of Arizona, which has been one of the hottest markets in the country. And, it's kind of weird. You'll see houses sell really, really fast, but you also see some home prices drop like across the board. So it's kind of hard to get a read as to where exactly things are headed right now, because the other main factor that you have is interest rates are going up. So for a while, rates were hovering in between 2-3%, right? And now rates are over 5%, which makes a huge difference when you go to qualify for a mortgage, right? That interest rate is a significant factor in what you can afford, how much home you can afford to buy, because it dictates your buying power in terms of your debt to income ratio. So if your interest rate goes from 3% to 5%, suddenly you can't afford as much house. So people who have been on the sidelines or have been outbid and have been trying to buy a house for a while now suddenly are finding that their affordability has gotten even worse. And it's one of those things that you can't really attribute it to inflation directly. It's more of a factor of interest rates going up. But so I think that's definitely something to pay attention to, is how things are going to slow down. And but there's also a lot of people are talking about how millennials are coming of age to purchase homes, and the population of millennials is similar to the baby boom generation, if I understand correctly. And so you're going to have a ton of demand, or a lot of people that are looking for housing, and it's not like renting is a much better option. So if you qualify to buy a home, you're going to want to try to take that route, as opposed to paying the same amount for a rent, a smaller rental than what your mortgage payment would be if you qualify.
And how much of these private equity firms like BlackRock coming in and buying up homes is affecting the housing market right now?
I mean, I'm definitely not an expert in this, but it seems like quite a bit. Home prices, there's no question that they've been overinflated, and in Seattle, which is another one of the hotter markets where I worked for a little while when I was in the mortgage business directly, was you would see situations where a house was listed for $1 million and it would sell for $2 million.
That is fucking wild.
Yeah. And I mean, all over the place, this is happening. San Francisco, another hot market, LA, and so this is not normal, right? And so cash buyers or institutions that have a lot of cash obviously have an advantage in that kind of environment. They don't need to worry about a low appraisal. They don't need to worry about qualifying. So I suspect that BlackRock is definitely influencing the market. So we'll see how it plays out now as things kind of slow down and interest rates are back up.
Man, it's I grew up in Northern California, and everyone that I know had just accepted oh yeah, we're just never going to be able to own a house. And I had a good job, software engineer. It was unless you were willing to basically, sell your kidney or, one of your children, you weren't getting a fucking house, especially not in the SF Bay area. And
or Southern California for that matter.
Yeah, absolutely. So my whole view of the housing market is just fundamentally warped, and it's so weird to have moved to a more reasonable and much more awesome part of the country now, and to see house prices and just be like, holy fuck, that is on discount. And the reality is, no, that's just a slightly more reasonable price.
Yep. Yeah, it's going to be interesting to watch.
You talked about the government kind of incentives that aim to help a first-time homeowner buy a house. Can you speak to the assumption that sort of every American, I think everybody should be able to buy their own house, but I'm also fascinated in the U.S., and maybe this does exist in other countries, but my perception is that it is a kind of unique United States phenomena where basically, the sort of go west, my son, is financed by the government. Is that something that we see in the rest of the world, or are the institutions and that allow or that are supposed to allow for U.S. citizens to own their own house and be able to have their own property, which are great things. Has that affected the market? Well, yeah, two questions. One, is that something we see in other countries? Two, how much does that affect the housing market, the Fannie Mae and Freddie Mac, and do we see that in other countries? Three questions.
So as far as other countries go, I'm not super familiar with how it works in other countries. I've talked to friends in Egypt, and I know there it works very differently. Usually the builder of a home is actually acts as your lender, and so the bank isn't even really a part of the equation a lot of times, or the consumer isn't dealing directly with the bank. But yeah, I'm not super familiar with how it works in other parts of the world. Here, okay, so there's a couple different things. So Fannie Mae and Freddie Mac, they buy the paper from the lender, and they in a sense indirectly enable a home buyer to purchase a home because they're the ones who set the parameters for who gets approved. There's also other programs that the government sort of uses to subsidize housing. One of them is called FHA. I'm not sure if you're familiar with that, but it's become a lot less popular in this market because sadly, this is maybe a theory. I don't take this as a gospel, but if you're in a competitive bidding situation where you have 10 homes or 10 offers on a home, and one of those offers is a FHA offer, typically you're not going to get selected. The guy with the cash offer that's $500,000 above asking is probably going to get selected over your FHA offer, which is 3% down, low credit, accepted government program. FHA actually used to be one of my favorite loans to do when I was an originator, because they helped so many people get into homes that otherwise wouldn't be able to get into homes. So 3.5% down. They don't really have a minimum FICO score, although credit is definitely a consideration. You do have to pay mortgage insurance, so it's a little bit more expensive of a loan. But the point is, it gets your foot in the door, right? And so these have become utilized a lot less. So as things sort of begin to soften, I kind of expecting FHA to make a little bit of a comeback, if my theory is right that they've just kind of taken a backseat because of the multiple bidding situation, multiple offer situations, that people just feel like I'm not going to be competitive if I put forward an FHA loan. So yeah, that's kind of the long and short of the government's participation in it. Obviously, we could talk about 10 years ago and the bailouts of the major banks all pretty much had to do with mortgage-backed securities, faltering, and that was because lenders were writing these loans that were extremely risky, where they would the rate would adjust after a couple of years, and it would begin to amortize negatively. So say you started with a loan of $500,000. Once it starts negatively amortizing, that means you're basically adding debt to your mortgage. So your loan amount is growing. And so people became upside down. They'd walk away from their house, and the banks were left holding the bag, rightfully so, because they're being so irresponsible. And so things have gotten a little bit better in that on that front, and that it's more difficult now to get a loan than it was 10 years ago. And so but the government's influence is undeniable in the mortgage market.
How much do you think, like, the government overstepping in the housing market has more to do with the byproducts of 2008 versus them trying to get ahead of, or them thinking at least they're getting ahead of, some larger issue?
I mean, I think it's a little bit of both. Like, I tend to not trust the government in general, so I don't know what their motivations are beyond trying to cover their own asses. But
What? That's crazy.
I know. But I think I don't think it really makes much of a difference what their motivations are. I think they're kind of stuck, right? They're stuck between a rock and a hard place right now, trying to solve inflation. And so whether or not the housing market is going to be the central point, or the first bubble to burst in this current recession cycle remains to be seen. It probably won't be. I think there's probably going to be enough demand of people who've been sitting on the sidelines, haven't been able to get into a home for the last 2 years because they've been outbid by BlackRock or cash buyers or whoever else. So I think the housing market's going to soften. I don't think it's going to crash completely like the way that it did in 2008 and 2009. And so I think it's going to look a little bit different this time around. And, to give the government some credit, A part of the reason for that is because it has become more difficult to obtain a loan, and because they have made it illegal to do these negatively amortizing loans or these option arms and things like that were so toxic and such a big part of the housing collapse 10 years ago. Keep saying 10 years, man. It's more like 14 now, right?
Dude, right?
Like crazy.
Oy. All right. We will dive in for the rest of our time on Bitcoin. I do want to give you one last opportunity. Feel free to just like take a jab at anyone politically speaking or in that side of things before we dive headfirst onto the Bitcoin of it.
I mean, they're all criminals, man. So where do you start? Jerome Powell, Janet Yellen, like double middles. We see you. We don't like you. And Bitcoin is coming to take eat your lunch. Yes.
George, how do you feel about my background right now?
It's
What?
not expect that, actually. Yeah, that's creepy. Very distracting.
This is a real photo. It's unaltered.
Oh, really? Okay.
100%. Just straight real.
Fact checked.
That's
Fact
actually
checked.
Janet Yellen's foot.
Oh.
No.
Oh, God.
All right, so Bitcoin and mortgages.
Yes.
Like this feels like a fantasy or pipe dream for a lot of people who maybe have used Bitcoin as a way to save money because they never had a savings, and now maybe looking at this opportunity to, whoa, my savings is turned into potentially being enough to afford a home. You're seeing it happen in other countries like El Salvador, where buying homes with Bitcoin is the norm. Talk to us a little bit about just the rumblings you're hearing and things and efforts that people seem to be focused on within this space of collaborating home buying, mortgages, and Bitcoin.
Yeah, so let's start with kind of where we're at today. And I mean, there are products that exist today that help you if you're a Bitcoin holder to acquire real estate, but it really does require you to have a lot of wealth in Bitcoin. So typically using a traditional Bitcoin lending product, such as an Unchained Capital or maybe a BlockFi, if that's what you prefer, and just putting up that collateral to free up liquidity, and then usually you're going to use that liquidity to make a down payment on a home. Or if you have enough Bitcoin, you're just getting enough liquidity to buy a home outright. Now, why would you do that? Why would you pay 8 to 11% to borrow against your Bitcoin, take the volatility risk of getting liquidated and buy a home? Well, two answers to that. One, you have a lot of Bitcoin and it's fine. Like, you're not super worried about your loan to value ratio. Two, you don't really have any other options, right? Maybe all of your wealth is in Bitcoin. And so you can't produce a W-2. You can't produce a bank statement that shows that you have income, which is what a traditional mortgage lender is going to require. So for a lot of people, this might be their only path. And forget about Bitcoin for a second. This might be the case even if you're just somebody who has a lot of traditional assets and you don't have a consistent income. So qualifying self-employed borrowers, for instance, is one of the hardest things to do in lending, because there's such a paper trail that's required to document in order to show that they have the income that they say that they have. Businesses are just a lot more complicated than a straight up, here's my W-2, here's how much I made, and here's my pay stub. So some wealthy Bitcoiners will fall into this category. And as the price continues to appreciate, people are essentially coming into new wealth. And again, one of the first purchases they're going to want to make is real estate. So where this is going is there's now products that are starting to emerge. I mentioned a couple already, Ledin and Milo, who are offering Bitcoin-backed mortgages, and they're I see them as sort of transition products to where I hope we're headed with a Bitcoin-backed mortgage in the future. And what they allow you to do is use your Bitcoin asset in the qualifying process. So one of the things that Fannie Mae and Freddie Mac require is when you're providing an asset statement, it has to be seasoned funds, which means that it has to be your money. So what you can't do is provide them a bank statement that has a $60,000 deposit on there, right? That came 2 weeks ago, without paper trailing where that money came from, right? And so recently Fannie Mae and Freddie Mac changed their guidelines to say, well, if you're a crypto holder, we'll allow you to paper trail that $60,000 if you can show us that you actually sold your crypto and that's where that money's coming from. So, and this is a step in the right direction, but it's far from what we want to be able to do, which is not sell at all, right? We want to be able to show this is actually my Bitcoin that I have at, in my Trezor, and it's worth X dollars. And this is actually where a company like Hoseki comes in to establish proof of reserves. And they're doing great work to basically produce a statement that an underwriter is going to look at, and it's going to look just like a Wells Fargo statement or a Bank of America statement. So, so really, really fascinating evolution in the entire space to see something like this come up. Because, again, if you showed this your lender a screenshot of your Trezor and say, look, I got $100,000 worth of Bitcoin, they're gonna be like, what the hell is that? What are you showing me, right? There's really specific parameters that are required for you to actually have an asset be used for qualifying. And not the least of which is it has to come from an institution that says, yes, you have this money. And so Hoseki's coming in and solving this problem by establishing proof of reserves. And so any lender, not just the Ledins and the Milos of the world, can now use that statement, and it can be, again, just as if it were money that you were holding in your checking account at Bank of America. So so Bitcoin becoming your credit worthiness is where I hope the space is starting to head, because I think we have to reimagine what Bitcoin offers as collateral to a lender. And I had a tweet yesterday where I was asking this question of like, how come when I'm in a mortgage, if I'm making my mortgage payments on time and my home drops in value, my lender's not knocking on my door doing a margin call asking me to come up with the difference. But when I borrow money against my Bitcoin and the price of Bitcoin falls, I get margin called, even if I'm making my monthly payments on that debt. And there's a lot of salty responses, a lot of suits, not happy with that one. But it really just comes down to the fact that the market doesn't understand Bitcoin yet. And in my opinion, it's going to take some time, obviously, for the market to really understand what we're dealing with here, and the scarcity being the number one aspect to it. But really, I don't understand why we can't have a product where you don't have to move your coins. All you have to do is establish that you have them, with, again, a company like Hoseki leading the way with this. And that should be good enough for a lender. Just like if I give you a W-2 or if I give you a pay stub, it's not really, if you're a lender, it doesn't really promise anything in the future, right? I could get laid off tomorrow, right? I could get laid off the day after I close on my home. Now what? Everything all the due diligence, all the underwriting that you just made me go through is meaningless because I can't afford my mortgage the next month because I don't have a job anymore. And so, so I actually think if we're just using the logic, one-to-one, Bitcoin is much better, much safer risk for a lender when you look at it that way. But again, it's going to require some reimagining.
You had a very interesting tweet yesterday that I'm trying to pull up right now. I don't know if you recall it, or
I think it's the one I just mentioned, maybe the mortgage one.
With mortgages in the value, if the value of your home drops below the amount of your debt underwater, there's no margin call. Keep making your monthly payments, and you get to keep your home. Bitcoin is much better collateral than a house, yet margin calls trigger well below 100% LTV. Why?
Mm-hmm.
Can you maybe share sort of what you're talking about through the lens of both, and then why we can't, and then maybe we can, the four of us, have a discussion over like why maybe this is being blocked?
Yeah, I mean, just to kind of speak to it some more, I think what the point I'm trying to get at ultimately is, if a lender is going to issue me a mortgage for $500,000 to buy a $600,000 home, and the agreement that we're making at the time of origination is, look, lender, I'm going to pay you $2,500 a month, and in 30 years, you're going to be paid off. Come see me in 30 years, right? Or come see me if I don't make my payment. That's it. There's really no agreement that says, well, if the price of your home goes down, you're going to owe me more money, or I'm going to come take your home. Mortgages are really secure and safe in that way, and that's why people like them. With Bitcoin, you have the volatility risk, obviously, but the heart of my tweet really is, and this was missed again on a lot of people, especially the legacy finance folks. Why not? Why if I'm putting up my Bitcoin as collateral and I'm making the same agreement with you as a lender, and I'm saying I'm going to pay you X number of dollars per month, why isn't that good enough, right? Why do you also now need to reserve the right to liquidate me if the value goes down? And there's a lot of nuances here, and there's, it's a security, and it's just like, borrowing against your stocks or your bonds. And I get that, I get it. But why? Right? And this is where like Bitcoin is still not only misunderstood, but is an emerging asset class, and requires reimagination. Like I keep saying, like we have all the analogies fall short, right? When we talk about Bitcoin as digital gold and all this stuff, it's helpful to sort of start giving it color, but it ultimately doesn't do it justice, because we've never seen anything like it. So to try to put it in the category of stocks or bonds doesn't do it justice. And actually to try to put it in the category of real estate doesn't quite do it justice either. And so that's really the heart of my tweet is to try to get us to think differently about this.
I mean, a lot of people liken Bitcoin to digital real estate. And I think there are a lot of similarities between the two, and you can see that through line. Um, I don't disagree that volatility is definitely the biggest factor here, but at the same time, like you have other types of loans you can take out at a certain point. Like you could take out a loan of 50% of your portfolio value and live off of that as well, but you'd still succumb to some sort of a margin call should that portfolio value go below an agreed upon threshold. I'm genuinely curious, P or Chris, if you guys kind of feel like it's volatility or if there's something else here that's triggering this.
Sorry, can you restate the question? Triggering what exactly?
Like the necessity that you have to get margin called when you take out a loan against your Bitcoin or stocks and equities versus if you get underwater on your mortgage payments, you can still catch up, but you like still own that home and they're not taking that home away from you. Not yet, at least.
My understanding / assumption is that, and again, this is why I was asking that question earlier about like how is property treated in the rest of the world? Because again, in the United States, there's this this kind of like, like a person owns their home, and there's a lot of institutions, or rather systems that are designed to support that kind of like, that belief. And so I think that housing is just treated differently. I think that there isn't a good reason for it, but it's based in this set of beliefs that are around sort of like housing being this sacrosanct thing. I don't know, George, would you agree with that, or is that not a fair statement? Are there other places in the world where it's kind of just like, nope, this is just how it works with property or with houses specifically?
Yeah, I mean, I think there is the conversation about property rights specifically, but when it comes to mortgages, when you have a lien on your property, this has been said quite a bit. Like, okay, you're not the owner of your home, right? Home ownership is kind of a mirage if you have a mortgage. Actually, the bank owns your house because if you stop paying them, they're going to take it from you. But I guess the thing that I'm trying to push at is like, but as long as I'm paying them, we're good, right? The value is the agreement that we're making. Again, once we originate the loan, the ship has sailed. We got the appraisal, everyone's good. 30 years, come talk to me. And so I think that's that's definitely a different paradigm than any sort of other type of debt. And mortgages and housing in general are like a class unto themselves. They play by a different set of rules, and they have different set of regulatory standards. But I think that this is going to continue to evolve, and I think the introduction of Bitcoin as pristine collateral, to use that language, is going to make things really, really interesting, because once the legacy finance people understand Bitcoin more, and once a secondary market where, like we're talking about, deep pools of capital start seeing this as safe money, start seeing Bitcoin-backed mortgages as a safe place to put your money, then I think the market is going to explode. And I think Bitcoiners are actually going to start getting better terms, right? So better ability to qualify, right? Because lenders are going to start seeing it as your credit worthiness. So hopefully we can put a rest to FICO. Hopefully we can put a rest to the mountains of paperwork. I would love to see a mortgage product where all I need to do is get an appraisal and get my Hoseki, proof of reserves statement and call it a day. Like that's all you need to know about me, right? You don't need to really know anything else. And I actually, what I envision is some sort of cross collateralization where you're kind of posting both your real estate and your Bitcoin as the collateral, and you're over collateralizing the loan. Similar to how Bitcoin backed loans right now are over collateralized, you're now over collateralizing it with two different types of assets. And so I think if we start thinking outside of the box, we can get to a place where it makes sense for the lender. This is an acceptable level of risk, because I'm used to, as a lender, lending money against a home based on these antiquated Fannie Mae, Freddie Mac guidelines, where again, if you lose your job the day after we close, I'm screwed. To now, if you lose your job, guess what? I can just come for your Bitcoin. I can just slowly liquidate you one payment at a time, and until that Bitcoin reserve is depleted. So I think there's a lot of different ways to be thinking about this, but again, it's going to require legacy people to get on board with what's actually going on here.
Yeah, for me, I always have these moments where I'm like, oh my God, we're so fucking early. Like I have to remind myself, because like for me, I'm like, yeah, obviously Bitcoin is the only thing that matters. Like I'll fucking, like selling the chairs. Like I'm like, do I really need this car? Okay, well, I'm selling, you know what I mean? Like, and I think I'm on the even more extreme end where I'm like, I don't want to own a house. I just want to own Bitcoin. But yeah, I'm super excited for those systems to be more developed. One thing you said that was interesting, you mentioned sort of like, oh yeah, I'll come after your Bitcoin, and sort of during that, how do you imagine that working? Like, do you, obviously with smart contracts on Bitcoin, which again, people love to say like, oh, Bitcoin doesn't support smart contracts. I feel like that narrative is dying, but it has, to be clear, always been 100% bullshit. The first smart contracts were on Bitcoin, and then Ethereum came around and tried to make that claim, and it's ridiculous. But there are ways of implementing that at the, at the smart contract level. Is that the kind of systems that you imagine where basically you are locking up Bitcoin in order to guarantee that, if you stop making payments, that your lender can take possession of that?
Yeah, that's definitely one product that I could see emerging that I think would be a step in the right direction. I mean, ultimately, it would be great to be able to retain custody of your Bitcoin and get a mortgage. I think we're even further out from that, but I think we're on our way. But some sort of a multi-sig arrangement where you post X number of Bitcoin, and the house is also sort of a part of your collateral, and then if you default, what the lender can do is begin liquidating that Bitcoin. So that's the agreement that you're making. So whether that's a smart contract or whatever, I think that could be a really interesting way to automate it to where, if you don't log into your account and make your payment by the 5th or whatever, then a portion of your Bitcoin gets liquidated and you're current. Everyone's happy, right? So I think that would be a really interesting way to look at it. What I think we definitely need to evolve into for a product like this to really be workable is these liquidation triggers can't really be a thing, because if you're living in your home, the last thing you need is the stress of Bitcoin volatility to put your home in jeopardy, right? So, and that's again the heart of that tweet from yesterday of like, really, is this really a necessity? And right now it is, right? Because that's what the market will bear. But I think we're quickly coming to a place where, again, lenders are just going to prefer this over any sort of other collateral.
I'm curious though, George, like the lenders are one side of it, but also like the Bitcoin holders themselves, I think have to have some sort of buy-in that this system isn't going to essentially take their Bitcoin away from them. So maybe what are some reservations you've heard of, or maybe some like FUD that you'd like to essentially negate here on that side of the coin?
Yeah, so I think, so Pete kind of mentioned this earlier of like, should I buy a house? Do I even want a house? Should I just keep buying more Bitcoin? I think I've heard that sort of real estate FUD quite a bit in the Bitcoin community of like, real estate's a shit coin or whatever. And I think people are a little bit, I think people are still hesitant because of what happened in 2008. And I think when we're talking about your primary residence, you need somewhere to live. You need shelter, right? It's one of the basic human needs. And so you at the very first thing you got to do is evaluate, okay, what are my options for shelter? I could probably rent a place. What is that going to do for me? And what kind of a place can I rent? Or I can afford to purchase a home at, a similar level of what this rental would be. And you got to compare, like what do I want my standard of living to be? And again, this goes into time preference and all that kind of, Bitcoiner philosophical conversations that I think are really important. But when we're talking about a primary residence, I think it's very reasonable to desire something like this as where you would put your Bitcoin first, right? Like, I know that we want to hodl to and forever and ever and just like keep stacking or whatever, but eventually there's going to be a time where you're going to want to actually use your Bitcoin. That's just my guess. At some point in your life, you're going to be like, you know what, I've stacked enough sats, and maybe I'm ready to spend a little bit of it, or maybe I'm ready to leverage a little bit of it in order
How
to do.
dare you, George?
I know, super controversial.
I will never have stacked enough sats.
Yeah, you can. Guess what? You can even keep stacking after you buy a house. It's not forbidden. But I think that when we think about the sort of the hierarchy of needs, housing is right there at the top of the list, and it's going to be the first thing that you're going to want to do when you become as wealthy as we all believe that we're going to continue to become as Bitcoin continues to mature. So once you start getting into real estate speculation, that's when I start getting a little bit like, I don't know, man. Maybe don't use your Bitcoin to buy an investment property. Actually, probably don't ever do that. That just sounds like a bad idea. I think you have to be satisfying an actual, innate human need, and we're talking about shelter. So I think that's a pretty important one.
Yeah, I mean, for me, the calculus also, as it is and should be for everybody, I don't think anybody would contest this, but part of the reason that I prefer to rent is because I expect to have to be a digital nomad in the near and medium term. There are very few places there's types of properties that I would view as both an investment and somewhere I'd want to live. But in most of the places that I want to live right now, the housing markets are not in my favor,
Right. Yeah. Go ahead, Chris.
Yeah. Oh yeah. No, I think I was going to add to that as well. Like, I see, and this is kind of a bad way to look at it. I don't see my house now as an investment, but I see my house as it's in a desirable area and it's a place that I can rent. And I know, I think Ryan was in the comments saying he saw his rent go up 20% this year. I've been in my house for just over a year now, and obviously my taxes reassessed. And, the lucky thing about the state taxes is they go off the government CPI. My taxes only went up 1.7%, which is what my mortgage changed. So in a weird way, even though I'm stuck in the fiat ways and I bought a house, which, like George said, some people see it as a shit coin, I'm kind of like arbitraging the two trends of like, inflation's running at 8.5 or 8.5. Obviously, they don't want to go up that quickly in state taxes, or they think it's going to come back down to the 2 levels. So I got a delta of like 18%, inflation if you're looking at rent in the area, which it probably went up 15 to 25% depending on your house in my area as well. So I don't know. It's like, I think Pete Rizzo brings this up a lot as well. And then I'll kick it back over to George, but he says like all of us Bitcoiners, unless you're on like the get on zero crowd or you're really living 100% in Bitcoin, all of us, even though we love Bitcoin, are still arbitraging the trend between fiat and Bitcoin. And by many means, you can live the get on zero, you only take Bitcoin, you denominate all your fiat as soon as you get it into Bitcoin. So you can live that lifestyle. But I'd say the vast majority still, even if Bitcoiners are 2% of the population or world, that the vast majority of that 2% is like living the arbitrage or trying to arbitrage the most of it, I guess.
Yeah, definitely.
I would actually argue that everyone, whether they understand that they are arbitraging fiat versus Bitcoin or not, are definitely doing that. Like, I mean, I suppose if you are taking your salary and then immediately converting 100% of it to Bitcoin, and you're just always doing that, you don't care. But like, if you are interested in the price of Bitcoin right now and where it might or might not be going, everybody loves to say like 1 Bitcoin equals 1 Bitcoin, which I firmly believe. But at the same time, it's like, looking at my block clock, like shit, if, buying Bitcoin now is twice as good, twice as much in my favor. That's than it was when it was, well, actually more than twice when it was higher. And so I think everyone is legitimately considering that, or they should be, whether or not they are understanding the implications of the arbitrage opportunity and the challenges between fiat and Bitcoin. I also think that, the idea of like real estate being a shitcoin, I definitely don't think that. I think that real estate is probably the least bad shit coin, followed by USD currently, and then probably canola oil.
Yeah, I mean, we ultimately, I think, as Bitcoiners, what we want to be able to do is we want to self-custody our Bitcoin, and we want to be able to use it. And I think the first like real use case is going to be with real estate. And that's what I'm pushing for. That's what I'm hoping for. That's what some of these companies I've already mentioned have already been building towards. And I'm encouraged by what's already emerging. I mean, things are happening so fast, but this conversation is starting to pick up a lot of momentum. And again, if there is a future where, as Bitcoiners, you don't have to give up your Bitcoin, you don't have to sell it, and you don't have to worry about volatility, right? But you are leveraging one of its most important properties, which is its pristine collateral nature. Then why not? Why not use it to purchase a home? And if it opens up this opportunity for people to be able to qualify for a home who currently can't qualify for a home, then I mean that becomes really exciting, right? Because now it's also an onboarding, a way to onboard people to Bitcoin, who if a product that like I'm describing exists and somebody doesn't have any Bitcoin, but they don't qualify for a traditional mortgage, now all of a sudden they're gonna be like, well, shit, I'll just go get some Bitcoin, and suddenly I'm approved for a home loan. It's a complete game changer.
I think one of the big takeaways from like this entire conversation has really been it really just depends on what your situation is. Like I definitely fall more in line with P as far as being a digital nomad, and like the fact that I don't pay rent gives me that freedom to do that.
Yep.
But then also to Chris's point, like there are reasons as to why it does make sense to hold or store money in more places than just Bitcoin. I'm genuinely curious because what Chris essentially alluded to is his property, while it is sheltered today, could very well turn into an investment vehicle tomorrow. George, you point blank kind of said like, don't do that. So I'm curious why. And I might need to go cancel a couple of contracts if I'm convinced enough by your answer. So
No, to be clear, I'm saying don't try to use your Bitcoin to buy an investment property. I'm not, if you want to invest in real estate, that's fine. And I'm not making any judgments on that. I just think the use case that I'm specifically excited about when it comes to Bitcoin backed mortgages is to secure a primary residence. And I think that's really what I want to focus primarily on. I think there's another use case with real estate that I get excited about, which is financing commercial properties where you're going to have a mining operation, right? So it's kind of this virtuous cycle of you use your Bitcoin to acquire a commercial property that then gets you more Bitcoin. But I think that's like a maybe even a later phase. But yeah, I think all I'm talking about is, because you're absolutely right. People are in different phases of life. I'm married, I have 2 kids, and we have limited options when it comes to housing, right? It's harder to find a apartment to rent or a house to rent that we're going to be comfortable in, and that fits the lifestyle that we want to have. And so purchasing a home for us makes more sense. And if I can do it in a way without, while limiting how short I am Bitcoin, then that's what I'm going to choose to do.
I also love the idea that what this essentially unlocks is more use cases for Bitcoin to actually be used in transactions, used, as you mentioned, like as pristine collateral, which is what it was designed to be. There are obviously so many steps and hurdles in the way. Talk to us maybe about, from a legislative standpoint, anything that maybe could stand in the way or inhibit that from happening.
Yeah, definitely. So when it comes to Fannie Mae, Freddie Mac, right now, the biggest hurdle in getting to where, the product that I'm describing, which is forget about FICO, forget about W-2, forget about pay stubs, is this regulation that emerged after the housing crisis in 2008, Dodd-Frank Act, and it's called ATR, the ability to repay. So basically, it's required by law that you provide to a lender proof that you have the ability to repay on your mortgage. So it would be illegal for me to become a lender and say, hey, I'm going to give you a mortgage on your home I see your Bitcoin collateral here. Thank you for this. But I don't need to see anything else. That would be an illegal transaction in the eyes of the government, because the borrower hasn't demonstrated an ability to repay. So we need to get over that hurdle if what I'm describing is going to eventually come to fruition. Now there are some creative ways around this that, I think some companies are starting to work on. Utilizing multi-sig becomes a really interesting part of the equation, but that's the biggest regulatory hurdle that I can see. The other one, of course, is, what I described earlier of Fannie Mae and Freddie Mac not recognizing crypto assets as an actual asset. They don't look at it the same as your checking account or your savings account. Again, Hoseki is solving that problem in real time, and I encourage everyone to check that out, because it's pretty remarkable what they've been able to come with, and be able to generate essentially what looks like a bank statement based off of your Trezor holdings or wherever else you're holding your Bitcoin. And I think that's a huge part of kind of what's next, even before we get to changing regulations.
How does that work though? Like, are those bank statements produced by Hoseki, are those accepted by banks?
Yeah, I mean, it's a really, really new product, but there's definitely been some case studies that have already been used where they've been submitted to underwriters, and underwriters have accepted them. I mean, listen, there's a million different financial institutions that have their own little logo at the top that say, yep, this is George Mekhail, this is the date, this is how much money he's got, all the requirements that, this is the account number, right? And these are the things that an underwriter, when they're looking at a bank statement, that's all they're checking. They're looking at for those parameters. And so it's something that, Coinbase and Trezor and any of these, wherever you're holding your Bitcoin, you just can't produce something like that that's going to be compliant, that an underwriter is going to look at and take seriously. And so they've definitely solved this real, like, urgent market need to produce something that isn't going to raise any red flags. It's just going to say these are the assets, right? So yeah, it's pretty remarkable.
Man, I wish that like underwriters for this type of thing were the same as like underwriters for like physical objects, like if you ever do research, if you ever like looked into like underwriters laboratories, like any like electrical device like has like a little like stamp on it, they do the craziest shit. It's like they put it in this like giant furnace and they like increase the temperature while like running the electricity through, and they're like, will it catch on fire? Who knows? Let's find out. And it's like, does this thing actually meet these specified standards? Like just the physical laws of the universe. Whereas like financial underwriting, it's just so much hand waving.
It really is. Yeah. And actually what proof of reserves is actually, I think, one of the most powerful ways that, an underwriter can demonstrate somebody's assets actually exist and are theirs, and that they have access to them. Producing a bank account is also kind of works, but again, it's like, and if I can check in real time how much you have on your Trezor, that's a different level of qualifying you than if you just send me a bank statement from 30 days ago.
Man, it's also interesting. This is very much a side conversation. Well, maybe not, but just the privacy implications of that. Like we spend so much time as Bitcoiners not reusing addresses. And, that's the default in almost every wallet these days. Any modern Bitcoin wallet automatically generates a new hierarchically determined wallet address. And that is useful because otherwise on a blockchain, I'm saying this for the audience, but obviously everyone on the call knows, but on a blockchain like Bitcoin, you can see, the whole idea is that everything is fully auditable. You can see every single transaction that ever happened on the Bitcoin blockchain. Bitcoin Pizza Day is on Sunday. And when you spin up your own node for the first time, you download the entire history of the blockchain from inception, and you can literally go back and see the fucking transaction where that Bitcoin, that pizza was purchased. And that's really fucking cool. But it also makes things like maintaining one's kind of pseudo anonymity is relatively straightforward to maintain, although it's very, very, actually, essentially, it's very difficult with all the KYC systems that have been implemented recently or more recently. But anyway,
Yeah.
I just think about that. Like, if you're basically putting up your your XPub, all of your wallet addresses, how does that factor into, and how will people make that decision? Right now, I think most the average person is very used to just, of course, everyone in the entire world has access to my bank account, or at least, at least, of course, the government does, or increase anybody who has access to my credit score. I wonder how that will shift in a Bitcoin world as we move into hyper Bitcoinization.
Yeah, definitely, and that's a big part of sort of what I'm excited about is if we can get away from FICO scores and if we can get away from some of these legacy components, that it does become a little bit more private. I mean, ultimately, you're still providing some personal financial information, but maybe you don't have to provide your social security number anymore to a lender. And maybe you don't have to get KYC'd fully. You don't actually to get your proof of reserves document done. But you do have to your point, there is some privacy that you're giving up by providing your XPubs and wallet addresses in order to get this done. But it is an improvement on sort of a full KYC process.
Oh, I want to be very clear. It is a massive improvement. It's a huge improvement. Right now, your credits, I mean, yeah, when you apply for a loan, it's like, as you said earlier, the amount of information you have to give up it's fucking insane. I had to restrain myself not to make a joke about like, yeah, you also have to give your DNA sample and your firstborn child and all this shit, but you have to give everything. And like that, in any centralized system where that stuff is being collected or exposed, they will eventually be hacked, and that information will just become someone else's information. So
sure.
This would be a massive improvement.
I was thinking about this too. So like, what if, so obviously you're using Bitcoin as collateral, and whether it's a 2 or 3 multi-sig, assuming one key that you have, one key that the bank has, and then one key, let's just say a lawyer has, just to keep it simple, or an arbitrator, whatever. Imagine you get to a point where like you feel the bank is doing something dishonest to you, or the bank feels like you're doing something dishonest, but then they lose the seed phrase, or they misplace it with someone else's seed phrase. And it's like, oh, well, we want this. And I don't know, you get into hairy situations where the lawyer like could collude with you, or, it gets like, or maybe the Bitcoin's lost. So you're like doing this loan against something you thought that you have, and you both lost it, or something happens where like you basically can't unlock these funds. So you've been basically living in a house and they're like, oh, yep, it's good. You've been paying the fiat or whatever loan terms you have. But then they're like, hey, we're trying to margin call you, and they can't like actually use it to take advantage of it. So I think that would be a very interesting spot to be in.
There's a lot of really interesting stuff you can do though, even with Taproot, but certainly with covenants, which is a big separate thing in the Bitcoin world now. But you can have like decay. You can do this right now with Taproot, is my understanding. You can have like decaying multi-sig setup. So again, for the audience, a multi-sig setup is where you have multiple private keys, which are required in order to, spend your Bitcoin. So you can have a 2 of 3 multi-sig where you have 3 different, hardware wallets or 3 different private keys, and then 2 of those 3 are required. And you can do 3 of 5, you can do 7 of 10, whatever you want. But there are ways of setting it up so that, if it's a 2 of 3 multi-sig, but after 3 years or a year or 6 months or a week, it decays to a 1 of 3 or whatever you want, however you want to set it up. And there's also you could do all sorts of interesting payout schemes where it's like you are signing a transaction that guarantees that every month like a certain amount of this Bitcoin will be available to be reclaimed if X, Y, and Z. Like you can do all that shit on Bitcoin. So I think we're going to see more and more kind of novel smart contracts on Bitcoin with Taproot and Schnorr. And
that'd be dope.
Yeah, we'll be able to find the balance between like just being able to be like, well, if my lawyer and this other person collude, like I lose all my Bitcoin, you'll be able to set it up in these like, multiple sign transaction ways.
I still think, sorry, I'll go real quick, George, and then I'll swing it back over to you. But like, I can definitely see, well, that's cool. And there'll be a lot of people that do clever things. There's without a doubt can be someone like, I fat fingered, I only wanted a year and I put 10 years, or like, there's without a doubt going to be things like that occur. You know what I mean?
Oh no, 100%. But I mean, that's why like we're seeing all these really interesting businesses build out, like Casa, Unchained, and there's other ones as well, where their entire business model, which is extremely valuable, is we help you set up a secure, safe, multi-sig Bitcoin situation where, you are not, I like to say Bitcoin is about radical personal responsibility, right? If you fuck it up when you're setting up your hardware wallet, like your Bitcoin's gone, which is why it's like, like when I set up the first, many, many years ago, when I set up my first hardware wallet, it was like, I spun it up. I made sure I understood my seed phrase. I wrote it down. I wiped the wallet. I restored it. I did all the, like I sent a test transaction. I sent another one. I sent it back. I fucked it up. I learned, you know what I mean? Like that's a lot of work. And there is a lot of value in these services that are very trustworthy businesses where, again, like Hotline and Chain, they'll help you set up a 2 of 3 multi-sig where they are one of the key holders, and they have all these additional systems in place that make that a system where you can just show up and be like, make my shit secure, and they'll do it for you. And I think we're going to see the same things with these types of systems that we're talking about now. So I think in the near future, you won't have to kind of go it alone, so to speak, if you don't want to.
Yeah, I think it'd be cool too if on the sort of positive end of that is as the price appreciates, both a Bitcoin or maybe your house, or you hit a certain number of payments into your loan terms, you slowly get, you set up like a smart contract like you're describing, P, where you hit these triggers and then your Bitcoin collateral is automatically released back to you're in full custody.
Yeah,
I think that would be legit. So and I think that's ultimately kind of if you're holding Bitcoin for the long term, that's the beauty of this product I'm describing is, if you can protect your downside enough to where there's no liquidation trigger and you're taking an acceptable amount of risk and you're able to service the debt. Okay, so now your Bitcoin is just being utilized as collateral, but you're not spending it. And so even in a down market, you're okay. And you keep your house, you get to keep your Bitcoin as long as you're making payments. And then on the upside, you're basically in fiat terms, your debt's like dwindling to nothing because the Bitcoin is appreciating so much. And so that collateral could be released back to you as your LTV is lower and lower.
It's going to be really interesting to see how the incentives and the game theory plays out. Like right now, it's at the end of the day, if you want to buy a house, like all of us, unless you're like a fucking cajillionaire, you kind of do whatever you like. The businesses, the governments, the municipalities get to do whatever they want, right? They're like, here's the terms, and if you don't like them, like you can shop around a little bit, but ultimately it's like, this is what you're going to get, and you take it or leave it. And it's going to be very, very interesting to see how that dynamic shifts over time. And you have lenders, desperately trying to incentivize Bitcoiners to give that, to collateralize their loans with Bitcoin. I think that will be a very fun thing to see. As you put up the idea just now of, you sort of you sign a contract that puts up or uses your Bitcoin as collateral in a lump sum, and then over time it's released to you. I can also imagine it going the other way, where it's like, entities are like, yo, you get to live in this house for free, and then each month you kind of like collateralize a little bit more of the house with your Bitcoin, so that if you don't pay us back within 6 months, we get to keep your Bitcoin. Like, please take this. You know what I mean?
I'm sure George knows this, but like probably in like maybe July or August of 2020, when the market was like really starting to take off in the housing market, at least that's when I started looking, there was deals literally like that. They're like, all right, no closing costs. We pay for all of that. We'll pay for, like, I heard people getting vacations. They were like, we'll pay for your vacation for $2,000 wherever you want to go. Yeah. We'll throw in the plane tickets. We'll throw in the hotels. Like, they were like trying to get like all these one-ups to just get the house. They're like, we'll give you an all cash offer and this and that and this. Like, it was insane. And I'm sure George can relate to some of those stories.
Oh man, they're desperate. That's for sure. I mean, it was so much worse 10 years ago before. We used to have people that, these liar loans or these stated income, stated asset loans, like that you wouldn't believe the kind of stuff we would approve, because all you really needed back then was literally just a credit score, a credit report, and you didn't need anything else. And you could qualify for a home basically for however much you wanted, however much you said that you made. Is there was a moment in time where it was illegal as a loan originator to like ask for a statement to back up what a borrower was saying, because it'd be like, you risk discrimination. Like, why'd you ask this guy, not this guy? And so people just come in and say whatever, and we wonder how we got to it, where we got that all that time ago. But I mean, that's neither here nor there now. I mean, it's a very different world. One thing I want to make sure I say for anybody that's listening is, if you qualify for a traditional loan today and you want to buy a house, you should just get a traditional loan. That's probably going to be your best bet, right? it's still really, really early. Now, if you can use your Bitcoin as an asset to just to qualify for your loan, but without actually having to use it, which can sometimes make the difference in your buying power. Again, with keep plugging Host Techie, I'm working, I'm helping those guys, and I really like what we're building. And the product is really important. But if you can use something like that to qualify, then that's a huge win. If you don't have to spend it. So this conversation kind of goes beyond just like the Bitcoin-backed mortgage loans. There's a lot of nuance and a lot of different opportunity. But the point is, if you're a Bitcoiner and you have a W-2 job and you can qualify for that house that you want to buy and get a Fannie Freddie loan, that's probably going to be your best bet today in today's market. But this is very much a future-oriented conversation of where things are headed and some of these products that are starting to emerge.
George, I want to present a question that we received from a viewer. Do you think Bitcoin-backed mortgages are risky based on how they are marked to market? And when or how do you see the industry moving away from that for Bitcoin-backed loans?
Yeah, so I do. I think that it is risky to buy a home with a collateralized Bitcoin product that is marked to market, where you risk liquidation of your Bitcoin if there's price volatility. Like, you don't want that stress in your life. And living in your home should be, in my opinion, your sanctuary. It should be it should be a peaceful experience. And so it's risky enough using Bitcoin-backed lending in any scenario, but to use it to buy a home, to where now you're risking losing your Bitcoin and potentially your home, I do think it's incredibly risky. So if you're going to do it, definitely I would encourage you to look into products that allow you to retain at least one of your keys, and have really, really low LTVs. In other words, you're putting up a lot of Bitcoin to justify the amount of fiat that you're getting. You're not like maxing out what they'll allow. The other thing I'll say is that it's definitely less risky, in today's price than it was at all-time highs. So when we're at this point of the market where there's this much of a drawdown, probably a better time than previously to pursue something like this. But to the second part of the question of where do I think this is going, I mean, it really is kind of what we've been talking about. And I think as lenders begin to recognize that the risk is significantly reduced by being able to, in the case of a default, being able to liquidate your Bitcoin, right? It's a very important distinction. Not in the case of price volatility, but in the case of you defaulting, you not living up to your terms, a lender is going to eventually prefer that type of arrangement over what they have right now, which is like your promise that you're not going to get fired or lose your job, tomorrow after you close on the loan. So I think that's going to be a really important, like 0 to 1 moment when there's like an aha moment for a lender who's got deep pools of liquidity that's willing to hold these loans on their balance sheets and collect that yield that they're not getting from bonds, and they're maybe getting from mortgage-backed securities. But again, this is going to be superior paper, and this is the other reason I think this is going to be superior paper. Bitcoiners are highly incentivized to keep their Bitcoin. So when we sign up for one of these loans, we are probably going to be the best borrowers ever. I think that we value our Bitcoin so much that we're going to make that payment. We're going to make that payment early, right? So that's not the case in the fiat world. And so I think that as this asset class matures, and as the market becomes familiar with how stable Bitcoin borrowers are and how motivated they are to make sure that their payments are on time and avoid default, this is going to be A+ paper. And so that's going to take time to establish, but I think that's what we're going to see.
I want to start a company with you, George, called A+ Paper.
Or
a band. I'll take that.
either one works. Yeah, we'll be the new Fannie Freddie. We just need like $1 trillion probably. That's all we need.
What? I'm curious because we're starting to see like the banks make moves. Fidelity now offers 401k exposure to Bitcoins. You're going to slowly see these dominoes fall. Where or what do you think is something that is not necessarily related to mortgages or the housing market in general, but if that starts to have Bitcoin sort of get involved in this, you're like, the housing market, mortgages are the next one up?
Can you ask that a different way? Sorry, I'm not sure I'm tracking.
No, no worries. So like I see Fidelity allowing people who hold 401ks with them to now access Bitcoin as a precursor to an inevitable Bitcoin ETF traded on the public markets.
Okay.
What would that sort of scenario through line with the Bitcoin
Mm.
mortgage, Bitcoin backed mortgages sort of being the Bitcoin ETF in this scenario? What would be that first trigger event in your mind or your opinion?
Yeah, no, I definitely think they're very comparable. I think we'll probably get a Bitcoin ETF before we get a real Bitcoin backed mortgage secondary market. So, and this is what when I'm describing, a lender coming along and realizing, okay, there's something here. I'm now going to put up huge pools of capital. You think about how capital intensive it is to be a Fannie Mae or Freddie Mac, or even a jumbo lender, right? You need a lot of liquidity in order to fund these loans. And so I think it'll probably go ETF, and then it'll go Bitcoin backed mortgages secondary market. And what that'll do is it'll enable lenders who are consumer facing to create these loans and then sell the paper to these secondary market pools of liquidity. And so that's what we don't have yet, and I think that's going to be the pathway to something like this becoming more mainstream and becoming adopted. Is these lenders are going to need to be able to sell the paper off of their books so they can turn around and re-lend their liquidity to borrowers. And that's really how the mortgage business works right now. Is as soon as your originator closes on your loan, they're turning around and they're selling that paper to Fannie Mae and Freddie Mac, and now they've just or whoever else is buying it. And now they just freed up that liquidity and they can go lend it again. But the business model is they're making money every time that they do that. So that's what doesn't exist today for Bitcoin backed mortgage. So any of these companies that want to create a true Bitcoin backed mortgage are going to either need large pools of capital, or they're going to need a secondary market to emerge.
There's a lot to chew on, a lot to think about. I mean, I could probably talk to you for another hour asking you so many stupid questions about this. I'm curious though, if there's a topic in this realm that we didn't touch on or we didn't get a chance to sort of discuss that maybe you wanted to break down a little bit.
I think the thing I really want to drive home is, like, when I'm asking these questions on Twitter, when we're exploring this, I recognize a couple of things. One, still really, really early. And this is going to be something that happens over a long period of time. And two, it's going to require us completely reimagining everything. So like I had some people in my comments asking, answering my question as if I didn't understand how, the current, Bitcoin backed loan scenarios work. It's not really what I was getting at. The question is more rhetorical of like, why do we think about Bitcoin backed mortgages or Bitcoin loans in general the way that we do today? And the answer is because it's still early, right? And lenders don't fully understand it. But where we're headed is when the market matures, Bitcoiners, I think P mentioned this earlier, are going to be able to dictate our terms, right? There's going to be a scarcity of people who have Bitcoin, and lenders are going to be wanting to participate with that part of the economy as much as they can. They're going to get creative, and they're going to bend over backwards, and they're going to have really low interest rates and really simple ways of qualifying us that don't currently exist. So I just want to continue to encourage people to just reimagine. So even when we say the word mortgage, you kind of get stuck in this like, oh, I know what that is. It's 30-year fixed, and it's that whole process that I started out the conversation describing. And I think we got to get away from that and just really, really simplify it. And I think Bitcoin allows us to do that because it's, we've never had anything like it before. And so that's what I'm excited about. I think the future is very bright in these terms. And I don't think that Bitcoiners should be concerned or scared about a future where we're able to utilize our Bitcoin to acquire the things that we want and do it in a way where we don't have to spend our Bitcoin, right? I think that's the idea. I think Saylor even talks about this. It's like this whole idea of like, you'll just, as price appreciates, you'll just be able to keep refinancing essentially. And so that's what I'm after.
Love it. George, where can everyone keep up to date with your ongoing thoughts and discussions around this and all of the shenanigans you post about on Twitter?
Yeah, I mean, I'm on Twitter at G Mekhail, Gmekhail. That's probably the best place to find me. So hit me up. Let me know if you have questions.
And of course, guys, do not forget tickets for Bitcoin 2023 are sold out for fiat as of right now, but you can still buy those GA tickets using Bitcoin. I know a lot of you guys are cringing at the thought of that. Just literally go buy $250 worth of Bitcoin and then immediately go and buy your ticket. There, problem solved. That simple, guys. Because ticket prices go up on Friday.
Indeed, they do. You can still buy your whale passes with fiat, but those are going quickly as well. So Friday at midnight, prices go up, and they will continue to go up, especially after we announce details for the next conference next month.
Give us a hint, though. We're talking like Olympus Mons, right? Surface of Mars.
You're not supposed to tell people.
You know, okay, George, I'm sorry, but I'm gonna let this slip. But we have found the lost city of Atlantis.
Oh,
We are in deep negotiations right now. All I'm gonna say.
With the Mer people. George, it's been an absolute pleasure, man. Yeah, when we were planning out the conference, I was so excited to learn this was an area of your expertise, one of the many. You're like many of us in Bitcoin are. You are a true Swiss Army knife, and super excited to learn more about this myself, and also to be able to talk about this on Bitcoin Magazine Live. So thanks for joining us.
Awesome. Well, I really enjoyed the conversation. Thanks for having me, guys.
You're the man, George. Everyone stick around. We got news and notes. Big breaking news, guys. Like, honestly, I'm shook to my core. Stick around after this commercial break and you'll hear it. What's up, guys? We are back live. All right, I'm floored. I'm angry. I'm pissed. Costco is raising the price of their hot dogs. The world is ending. That's it. There's no rhyme or reason about it. Also, just math nerd pointing this out. They're raising their prices 66% on a hot dog and a soda.
But don't worry, bro. Inflation ain't real. / it's Putin / it's COVID. Don't even worry about it. Don't even trip, dog.
Dude, it's
Didn't we just talk
impacting
last week?
my $1.50 meat log that I like to put in my mouth.
Was that just the one, or do you like to do the wall of hot dogs? Like what? Which were we talking?
I have really bad hand to mouth control, so I have to use two hands whenever guiding things to my mouth.
I mean, look, we were talking about it earlier. I learned today that this microphone, which is one of the best ones you can use for podcasting, is in Germany called the elephant dick. Now, I don't understand that. I don't understand the reference, but I just wanted to let everybody know that that's what I'm speaking into right now. So you could just get like a reticulated arm for your hot dog dick, and then you could eat it that way.
Wasn't it just last week that we were talking about trying to like stock up on Costco hot dogs? That would have been a great trade. You made 66%. You would have reaped like the losses that you had from your Bitcoin being down, and you would have arbed that up. That's like 8% return if you like minimize your losses and gain that. So that's wild.
When I was first like understanding how money worked, a good friend of the family like pulled me aside. He manages the pension fund for the entire Dutch government. And he sat me down and I was like, how does money? What is a money? And he was like, everything is information arbitrage. And I was like, what? He was like, everything. And we had this long conversation. Anyway, that's the trade. You're absolutely right. The trade is last week we should have gone and bought, we should have sold half of our Bitcoin. I'm not crazy. I'm not saying all of it. Sold half the Bitcoin, just slam that into Costco hot dogs. And this week we would have just immediately made 66%. Like, what the fuck?
It's wild. So Q was right. And then I know we were getting on the nuance of like, no, but if it stays the same while they're printing more money, like you're not getting money for it.
I'm so angry that I don't have time to like to make some like shitty memes about this right now and post them on Twitter, because the memes must just be fucking incredible.
But like, this is like, I'm not trying to be hyperbolic. I'm not trying to exaggerate or anything, but like, there are certain consumer goods that have stood through stability and we've turned to as like a, hey, Arizona iced tea, with the exception of the state of California, is still worth 99 cents. Like, the hot dog at Costco should cost you $1.50, whether you're in LA, Miami, or in the middle of the country somewhere. Like, this is really a further emphasis, in my opinion, of the ongoing struggles and the fact that we are in the middle of the recession. Like, I don't need to wait another 2 months for some government entity to tell me, oh, technically GDP contracted yet again, so on a technical basis, we're in a recession. No, we're in a recession because the lowest quality of, how do I phrase this? Like, places like Walmart and Target cater to everyone. From
choose your words
income,
very carefully, Q.
Middle income.
Don't you dare insult
income.
the Costco hot dog.
No. You're not understanding the point I'm trying to make, P. Like, these places cater to everyone across the spectrum, but cater a lot more to lower income families. They do grocery shopping at places like Target and Walmart, whereas like middle and higher income families, they get to go and can afford places like Whole Foods. But now all of a sudden you're seeing from their earning reports in the last 48 hours from both Walmart and from Target, the actual effects of higher gas prices. Walmart is citing the fact that, hey, gas is actually so expensive. It's costing us more to bring in all of the stuff. So we're selling for the same rate, but unfortunately, because the cost and overhead is going up, like our earnings per share is going down. And as a net result, you saw Walmart get crushed almost 12%. You had Target get crushed over 20%. And like, what does all of this have to do with the recession? What does all of this have to do with the economy? Well, this is where people feel the economy. People don't feel it in the stock market crashing 20%. Like, everyday people don't. People are going to feel it though in the next quarter when people are going to Walmart and everything costs $1 more, just net. People are going to feel it a lot more when, hey, I didn't mind going to Costco to grab a couple hot dogs because it was $3, but now it's $5. Like, are 2 hot dogs really worth $5 to you? And we have to start asking these questions, because unfortunately, prices aren't going to go down. Like, once the Costco hot dog is $2.50, it's $2.50 forever.
Guys,
I mean, yeah, let's be clear though, right? Like, Costco subsidized those hot dogs significantly.
Of course.
Right? And so
of course.
I think
they were always operating a loss.
Yeah, but the fact that they can like Costco, like an amazing, very strong company, the fact that they have decided that they can no longer continue to operate at a loss on this item is that's as you're saying, that's a stronger signal to me than many other things. I also just want to point out, as we were talking about earlier, like, I think it was the CEO of Costco was very clear in a board meeting, like somewhat recently, like within the last couple of years, that if they raised the price of hot dogs, he was going to stab the person that suggested it. And I'm just sad that he's going to go to jail now. But I support it. I support violence, in this case.
I'm reading some of these comments about like how much gas costs, like all this stuff. Like we are, I think, adept enough to realize the fact that the recession is here. P, you bring up an excellent point, and like, let's kick this around a little bit. The cost for their drink at most is 5 cents. So let's be generous and give them 5 cents. They're the ones wholesaling all their hot dogs and buns anyways, and it's the same product that they're selling to you in the store. I'm not expecting that hot dog to cost them more than 50 cents a hot dog to still get to you. But then that cost of gas, shipping, storage, those costs are what are creeping up. And those are the costs that are now causing it to be too steep of a loss at 150. My assumption, at least, is that at 250, Costco is just decreasing their loss, but it is still trying to give us, the consumer, a deal. I don't know if either of you buy into that, or if you think this is a stark shift in strategy. Because to P's point, like, when your leadership is so devout and fully committed to giving its consumers, its customers, this deal, and then they have to rescind on that, do we think they're fully flipping the script now? And it's like, no, they're going to start making money on their hot dogs because they have to? Or are they still operating at a loss? They just needed to decrease how much they were losing.
I think it's the second one. I think it's that, like, you know, yeah, I think it's the second one. I think they're just, they have to figure out ways. Whether or not that will turn out to have been a prudent decision remains to be seen. But you know, you don't become a Costco by not being able to make very calculated financial decisions. And I don't think this is Costco making a profit or deciding to fuck people or anything like that. I think it's that they had to make, I suspect, is that they just had to make a business decision. And this was an area that they were like, we can no longer continue to sustain this loss, and we need to be able to support this other thing. I mean, Costco is also an incredible company in that they offer, as I understand it, some of the best healthcare plans, like, of any large company in the United States. And so, you know, like, for all we know, they were like, fuck, like, we can't continue to offer these like insane, amazing healthcare, you know, things. We have to cut corners somewhere. And they were like, well, fuck it. We're going to take the brand hit and cut the price on the hot dog.
Yeah, I think to P's point, exactly. I mean, when you think of it, Costco sells more hot dogs than all 30 MLB teams combined over the course of the year. So just
what the fuck?
Yeah, you didn't know that? Like, so
no, that is insane.
That is a wild stat.
It's an awesome stat. I love that stat, to be honest. They sell more than the MLB in a season, all 30 teams combined, all their stadiums, all the baseball games that take place. They sell more hot dogs in a year than all the MLB combined in any given year. So, like, just think about like the amount of money that they're eating on, like, it's got to be like hundreds of millions or close to $1 billion. It seems. I don't know. I mean,
dude, that's crazy.
It's all about information arbitrage. So Arizona iced tea is still pegged at 99 cents. So is this when we missed the Costco hot dogs one? But
oh my god! Wait.
Arizona have you guys? Iced tea is actually not as consistent as that, because it is $1.29 in LA and in Southern California.
What is
Arizona iced tea?
Have y'all seen the ad?
I've already gone through this. I already went through the heartbreak of walking into
this
the
is the most intense I've ever seen you, Q.
Or like, I think it was like $1 and a dime, because you have to pay like the California recycling tax on top of that for whatever aluminum cans and all that. And I remember them being like, no, it's $1.29. I was like, no, it's not. It says 99 cents on the can. He's like, no, it doesn't. And it said $1.29.
Dude, have you seen the ad? You watch Atlanta? I just started watching it. There's an amazing episode in season 1 that's just all like commercials, and that is it's one of the funniest ones when there's like, it says it right on the can.
That's funny. I have not seen that.
Go Google Atlanta Arizona iced tea. It is Arizona iced tea, right? That's what the ad is for. Yeah.
Interesting. Right. I pulled up a tweet, and Arizona iced tea is like the $1.29 is for Canada.
Well, I guess this transitions well. So inflation numbers came in, not for the United States. I think we're at 8.3 right now, but Canada is at 6.8. which is surprisingly lower than I expected. But the UK came in at 9% for inflation rate. So in the UK, 9% in the UK is absurd. And it's a 40-year high, obviously. I think the only other time that they've seen it like that was in the back end of the 70s. I'm trying to think, in the early 80s, early to mid 80s, I think is the last time they saw it. So it was kind of after the US saw crazy inflation in the early to mid 70s. So yeah, I mean, it's absurd. It's crushing economies globally. What are your thoughts on that, guys?
That's wild. I mean, yeah. It's
not going down. Like,
These are facts.
I respect Dr. Jeff Ross. I absolutely do. I get that we just saw a CPI number come in that is technically lower and that we are now being led to believe that inflation has peaked. And yet they adjusted the way they calculate it for this most recent CPI number. And they're just going to keep doing that. And I think, unfortunately, you're going to see so many things thrown to like combat the idea of inflation. We were told transitory. We were told supply chains. We were told, but there was something else before Russia during the holidays, like don't eat meat, that bullshit or whatever. It's just in meat. That's what it is. It's only inflation if you eat meat, drive a car, or I don't know, own a house. Like, fuck off. Then we have the Russia blaming for it. What's the most recent thing that they want to blame inflation on now, other than their own actions?
No idea.
I think you keep seeing them change what they say or believe, but like I hold it against Powell for getting up on a stage and in front of people who then articulated it out to the rest of the world essentially that, I don't need to, or inflation is going to be transitory. This is a short-term issue. Like, don't worry about it. What? Like, do you even understand what transitory means? Like, he was essentially
no. Wait. He was being factually correct. What he meant was it's transitory, and in the very near future, it will go up and then go up from there. It's a transitory thing because there's no way it's going to stay in the same. I'm kidding.
I get what you're trying to say, but like,
no, it's
the point he was genuinely trying to make was that prices are going up now, but they'll return to the lower prices. There's no historical precedent for that. And the historical precedent is the exact scenario P that you just described, that they've just gone up, they're going to stay there, and then eventually they're going to go up even more from that. Like, that is historical precedent.
Oh, for sure. Yeah.
Like, the idea that inflation was transitory expressed to me, at least, that Jerome Powell doesn't even know what the fuck the word transitory means.
No, wait, he knows exactly what it means. And the other thing that I think is important here is, I mean, like you hear me all the time, like rail against specific people, Vitalik Buterin, Buzz Aldrin, just, all sorts of people who are, personally responsible for shitcoining or whatever. I'm kidding. Buzz Aldrin is not a shitcoiner. He went to the moon. My point is, we also have to just remember that like these are systems level problems. Like fuck the central bankers, fuck Janet Yellen, fuck, Christine Lagarde, fuck Dr. Eggman, Augustus Carson's or whatever. But it is important to recognize that it is less about these specific people, though they are terrible, and more about the systems that have been allowed to exist. Because even if those specific people are removed, which they will be eventually, until we fix the larger systems, i.e. fiat money, we're going to continue to have the same problems. And I know that's not what I know you're not arguing against that argument, but I just want to say for the audience, like one of the reasons that I personally am so excited about Bitcoin, as I've said before, is because it starts to fix the incentives that are in place, right? I don't think that Bitcoin, a lot of people, there's a saying, people that say Bitcoin fixes this. I don't think it's that simple. I think Bitcoin is a hand on the scales that brings us massively back towards balance, but it's going to take time and we're going to get there within our lifetimes. But we got to focus on the systems that are in place, because again, the other thing is nobody is a villain in their own story, right? Jerome Powell doesn't look in the mirror and he's like, yes, I'm going to steal the money out of the pockets of Americans today. Fuck you, fuck you, fuck you. He doesn't think of him that. So he's like, oh, I'm just a man. What can I do? But the reality is he's like, I have to keep my job. And he's like, I have to look good for these other people. And in his head, he's like, that's okay. And he's wrong.
I want someone's head on a stake. Like nothing you're saying gets me there.
No. What I'm trying to say, bro, is we got to put all the heads on the stakes, right? I'm joking, but kind of. Maybe.
I'm not.
No. But again, it's like until we fix the systems, we're going to have the same problems. And that's why Bitcoin is so exciting. It starts to fix the incentives rather than the people. If Jerome Powell gets enough Bitcoin, he's going to think the exact same thing about himself. He's going to be like, I'm not a villain, but suddenly his incentives change. And he's going to be like, oh shit, Bitcoin, and he's going to start supporting it. And all the systems are going to, so that's the answer. We got to get Bitcoin into the hands of more people. We got to make Bitcoin robust. Otherwise we're all fucked.
I mean, I don't disagree with the notion that Jerome Powell is simply a stooge and the system in place is really like who we are mad at. But at a certain point, like, I'm still mad at the person executing the flawed system because either you're too stupid to realize it's flawed, in which case you shouldn't be in charge of it, or you're smart enough to realize it's flawed, but too cowardly to do anything to change it.
I think that.
Am I being too harsh? Like, is there a third way of looking at this?
I mean, look, if you're asking me, do I want to see Jerome Powell choked to death on 5 to 10 Costco hot dogs at once? The answer is obviously. But I think that it's important to acknowledge that, as I've said, 4 times since I started doing, co-hosting the show with you, Q, it's you show me the incentives, I'll show you the outcome. And until we fix the incentives, which is what Bitcoin does, ultimately, we're going to have the same people. Jerome Powell can choke to death on his half dozen hot dogs, which he's going to do because he understands the arbitrage opportunity that is unique here. He knew about it before we did. Guaranteed. Costco called him first and was like, yo, Powell, you got to know. And he took the appropriate investment opportunities. But there'll just be another Powell, there'll be Powell Jr. And he'll step in and say, I'm going to fix everything. These inflation numbers, my predecessor was a terrible, terrible man. He kicked babies and refused to kiss puppies, but I am better. And I want you to know these inflation numbers, they're just transitory. And it'll be a whole new thing, as I think Chris was saying just a second ago. So fix the systems.
I still fully blame Jerome Powell as to why my Costco hot dog is now $2.50. And you're not going to convince me otherwise, nor have I been sufficiently convinced that should we enter World War, whatever, or a civil war breakout, I probably shouldn't say this, but Lindsey Graham, that's all.
I just had this whole there's like in the movie, what is it? What was
Lindsey Graham is a lizard person.
Oh,
He's
for sure.
actually a lizard person.
100%.
Mitch McConnell too, but so is Nancy Pelosi.
What was the J.J. Abrams show where they crashed in an airplane? I'm blanking on the name. Very famous. Lost. There we go. You know how it would go like, it would like zoom in on their eyeball and then be like, and it'd be like flashback, and then it would like zoom back out. I just had this vision where it like zoomed into my eye, came back out, and then it's like, and that's how the civil war of Bitcoin, of 2022 started. Bitcoin was at 29,000. The Costco hot dog went to $2.50 per hot dog, and that was the moment no one would have ever guessed. But the $2.50 hot dog was the thing, the straw that broke the camel's back. And then it's like everybody's like, ah, and they freak out, and they have these like, the hot dog symbol. Everybody's like, wow, they're waving hot dogs around, beating people to death with them. It's gonna happen.
Like, these are. I say it only half in jest because I genuinely believe like we will look back on this moment, like COVID 2020 had its own moment, but this moment right now where you're seeing the place people go to get their day-to-day necessities start to have collapses in how much money they are making off of the necessities that people buy from them. Like, we are so royally screwed and there's no way out of it. Like, sure, if you want to look at the stock market on a technical basis, we have now entered a follow-through day as of yesterday. A place like Investors Business Daily will tell you market's in a confirmed uptrend. Like, I call such bullshit. I call the NASDAQ right now at having resistance at 12,000, and you're seeing a heavy crash. S&P 500 has more volume today than yesterday. NASDAQ, not so much. But all of these indicators tell me like we are so not done from the worst days, and there's only more bloodshed to come.
I wonder if you froze a hot dog. I bet you could use it as a knife. Okay, what else we got? Hit us with it, Chris.
Speaking about bloodshed, speaking of tearing down existing or almost existing government entities, the Ministry of Truth is no more.
Yes, the
like
disinformation.
Dolores Umbridge, fangirl, whatever her name is, like had her Department of Education swiped away from her. I mean, whether or not you thought that this was a good idea or a bad idea, whether or not you think that her work in the past has been good or helpful, whether or not you think that Biden is an asshole or like a senile old idiot, whatever you think, the idea that a centralized government-controlled entity is going to be the dictator of truth, and I use dictator very, very specifically here, that should have been very scary to everyone. Like, full stop. I don't care what you believe or not, so long as it doesn't harm me personally or my family or those I care about. And I think the world just needs more of that. But I'm just one man. Chris P, thoughts on the Ministry of Truth never existing?
I love it. You know, I think, I don't know if memes won this war. I don't know if the uproar was so big that that's how we won. It was something that's talked about earlier this morning. And I know some people are saying, you know, it was never going to go through as just a way to like lessen the pressure or like give a release valve for Elon buying Twitter. I don't fully buy that, but that's what some people were like theorizing, like, oh, like the government could say we tried to do something and it failed. So like, you know, they can say Elon's even more evil because of this. I don't know. I think that's a little bit too tinfoil hat for even myself. But yeah, no, I think it's a good thing. I think people were just in such an uproar and they weren't expecting that. They thought like this is going to be our way of moderating social medias, which they've never done in the past, but now they were trying to. So it's just, I think it came partly because of Elon trying to buy Twitter for sure. But yeah, it's very interesting. Pete, what are your thoughts?
So I know about this, of course. Friend of the pod, friend of Bitcoin Magazine, Matt Odell was talking about this on Rabbit Hole Recap recently. I'm very curious what the official narrative was around this. Like, is there a statement that was made by the government about why this was being dissolved? How did it specifically play out?
I can pull that up if you want to real quick. Let me read the one. There was
also,
like a segment.
Can we summarize for the audience what the disinformation board actually was and like what the kind of state of play in the timeline was?
My understanding was they were supposed to be a government approved entity that would fight misinformation online from spreading further and be the arbitrator of truth, essentially.
There were two things that they were specifically focused on. They said in their like charter. One of them was immigration, which was super interesting. And I forget what the other one was. I think it was like around inflation. We'd have to check, but there were two, and immigration stood out because I was like, "What the fuck?" And
it was probably climate change was the other one, or something like that.
No, I think it was. I think it was climate change. Yeah, it might have been climate change and immigration. And I think immigration is super interesting, and it was kind of like out of left field, or at least it felt that way. But when you think about it, that is going to actually be a major issue because people are going to start migrating from state to state, from country to country.
We need to check the validity, but Clout Casino threw a comment in the chat that I think is very important. But he says he read this started under Trump and Biden carried the program forward. Trump started it back when the Russian collusion garbage was spreading.
Oh, wow. That would be an incredibly
we need to validate these claims. This is just like, no offense. Someone threw it on a comment on a YouTube channel. So like,
oh yeah, of course.
Let's like try to
don't trust verify.
Chris, if you can pull that up, of whether Trump had anything to do with the original inception of this. I also want to point out, like, I don't know, maybe it's just me and I wasn't paying attention close enough, but Jen Psaki is no longer working for Biden anymore, and he now has a new comms person. Like, I'm not shy about it. I hate Donald Trump. I think he's a racist bigot, and I challenge you to go into the octagon with me. I welcome it. You have 200, maybe 300 pounds on me, and I still will absolutely demolish you. Anytime, Donald Trump, just name it, time and place. And yet, every single time someone left, as far as his comms person was concerned, like, there was a huge uproar over it. Jen Psaki goes and, like, no one's talking about it, but, like, let's be real. Jen Psaki was, like, as incompetent as, like, who is the dumb guy? Not Mooch, the other dumb guy. Love you, Mooch. That was press person for Trump.
Spicer. That's the only guy that I'm.
Yes.
Wow, I pulled that one out. I'm not a big politics guy.
But like, it was so, like, dude, that guy like could not carry a conversation with the press, could not articulate a good response, and then like was laughed at out the door. Let's be honest, Jen Psaki couldn't really articulate great responses. Like, was pretty much incompetent as far as I'm concerned in providing legitimate answers on like how Biden was going to do anything for the country. And then like, it felt like it was kind of quietly, she was like, get out of here. All right, we have a new person now. But like, I think it's a valid thing to point out that if we're going to point out Trump's flaws and who he puts into office and is helping to articulate his platform to the people, to the press at least, Biden made the same faux pas and should be held to the same standard, just in my opinion. But
yeah, the only reason I remembered Spicer, and this is just stupid, like funny fact, that like people like claim that he like swallowed gum, and I just thought that was like the funniest fact I've ever heard for anyone, so I just remembered it from that. Let me read something real quick from the Disinformation Governance Board disbanding. This was published in the Washington Post this morning. It's real quick. It's like a 1-paragraph thing that they had. Now, just 3 weeks after its announcement, the Disinformation Governance Board is being paused, according to multiple employees at the Department of Homeland Security, capping a back and forth week of decisions that changed during the course of reporting of this story. On Monday, the Department of Homeland Security decided to shut down the board, according to multiple people with knowledge of the situation. By Tuesday morning, Nina Jacano, I don't know how to pronounce her last name, but the head of it has drafted a resignation letter in the response to the board's dissolution. So very interesting that it disbanded pretty much.
I also now have a Newsweek article that's quoting Jen Psaki saying that this was a continuation from a Trump era policy. So, look, this was a stupid idea. I think, let me phrase it like this. Joe Biden was put in office by half of the country who essentially did not want anything to do with Donald Trump, more so than people who believed in what Joe Biden wanted to do. And I think as a result, a lot of the expectation was, hey, Joe, stop doing the shit Donald Trump did, like a misinformation, whatever you want to call this. Like, it was just a ministry of truth. And I'm going to call it that because it's fucking shady, sketchy, and it should never have been done, regardless of if Trump started it or if Biden started it. And it should have never been continued. And Papa Joe, you were put on in this position to literally discontinue the things Trump did, not continue them. You fucking idiot.
I want to make one correction to something that I said. According to Wikipedia, which has what seems to be a complete article about the Disinformation Board, which is the fucking most Orwellian name ever, it wasn't immigration. It was created to, at least initially, deal with information propagated by human smugglers, encouraging migrants to surge to the Mexico-United States border. So it was about immigration, but apparently it was specifically around that. That's what they're saying, which also does not mean anything. And also it was Russia-Ukraine related disinformation. Those are the two things that they cited. Weird, very, very weird. Just such a swing and a miss. Like, what the fuck were they thinking? It's crazy.
Pro tip, they weren't. But we're going to cut to a quick commercial break, and then we're going to be joined by the Bitcoin Magazine Pro team to break down what they're seeing on on-chain analytics. So stick around through this commercial break. And as always, use promo code FOMO to get 10% off of everything in the Bitcoin Magazine store.
Hello, my friends. We are back. We're going to be jumping in just a second. We are on Twitter Spaces and live here. We're going to be having a Bitcoin Magazine Pro conversation with Dylan LeClair and Genia about the markets, what's going on in them, and where we're going next.
Gentlemen.
Jay, nice to have you, man.
Thanks for having me.
We got to get you on Spaces here.
Yeah. Are we live already?
We're live on YouTube.
We are live, baby.
Amazing. All right. Yeah. Let me just let me log in, grab my headphones. Give me 1 sec.
Take as much
How's
time
it
as you
sound?
need.
Sounds good.
You sound great, man.
Terrific. Dylan, you're going live from your account or Bitcoin Mag?
We got everything. We got all of it. We got my account and Bitcoin Magazine
No. I mean, on Spaces, is it live from yours or from Bitcoin Magazine?
from BM.
From BM. Okay.
Dylan, I like that you have your books turned face out rather than like a normal bookshelf. You've got to like maximize the the visual.
Yeah, it's for the visual for
There
sure.
you go. I love it.
Dylan, can you send me the Spaces link, please?
Yeah, I sent it to you from the handle. You should be good.
Hang on. Oh, there we go. Perfect. All right. Good to go.
Dylan, check the chat box.
Chat box. Oh.
Everyone, we're getting situated here real quick, and then we'll start in a few minutes here. Thanks for joining us.
Yeah, let's get BitMEX up here as well, just because they won't be talking though.
Are we all situated?
Yeah, let's run it.
Yeah, I'm good to go. So mic on Spaces.
Yeah, just do us a favor. If you're not talking, try to mute everything. Otherwise, there ends up being an echo.
Sure.
But we are now joined by Dylan LeClair and Genia. I am so sorry, man. I'm not even going to try to pronounce that.
Yeah.
But thank you both for joining us today. Dylan, it's been a minute since we've all seen your pretty face. Markets are a little tumultuous since you were last here. So maybe say some calming words to everyone who's been panicking or freaking out. What are you seeing? What's keeping you so calm right now, Dylan?
Calming words. In terms of the global economy, I don't know if I have too many. It looks like we're in a kind of a meltdown. And while we're definitely we're already in a bear market for Bitcoin. I don't know how you want to define that 20%, 50%, whatever it is. I believe equities, both NASDAQ, S&P are in a bear market, but, credit markets and commodities have been saying this to really anybody that's, been kind of paying attention for almost a quarter now. And really with this inflation accelerating across the world, the credit markets are what runs everything here, and a lot of people are figuring out that the paper wealth they thought they had isn't all there. And Powell's comments about it basically wanting to kind of reverse the wealth effect, that seems to be what's happening. And so, in terms of being calm with Bitcoin, it's a long game. 29,000 just 2 years ago would have had everybody euphoric. So obviously, it's good to zoom out a little bit. But I don't know if in terms of price action, in terms of Bitcoin itself or equities, if we're out of the woods. I certainly have some cash on the sidelines, ready to buy some blood. And I don't think for the most part that blood has, we've seen the worst of it. Could be wrong, obviously. But really it looks like this whole thing is unwinding at an accelerating pace.
What percentage of that analysis is directly tied to the recent announcement that Costco is increasing the cost of its $1 or $1.50 hot dogs? We're like 100%.
I believe that's fake.
Really?
Shut up.
Yeah, that's definitely not real.
No, we just spent like 45 minutes like talking about how this is the end of America and how the CEO was going to have to make good on his promise and stab the other guy to death that he threatened to in the board meeting like last year, whenever it was, when he threatened to increase the price of hot dogs. Is this is breaking news? This is a fake story.
It
Yes,
seems
fake
that way.
story.
Yeah.
My faith in humanity has been restored. Apologies for the interruption. Please continue, sir.
Yeah, well, I mean, I guess we can dig into markets more. I think just in terms of to start the show, and with Jenny up here, we've done deep dive spaces for a while. Deep Dive has rebranded to Bitcoin Magazine. We did that about a month or two ago, and now I guess officially we're gonna be announcing. We've already kind of put it out to our research newsletter, but we are partnering with BitMEX as the official exchange sponsor of Bitcoin Magazine Pro. And Jenny is going to talk a little bit about what they're doing with their release of their new spot exchange. So Jenny, do you want to rip off on that a little bit?
Yeah, sure. So definitely happy to give you guys some more details on that. And thanks for having us today. Really appreciate it. This is definitely a good time to have this discussion, given everything going on in the market. I guess number one, and then of course we want to chat about the spot exchange. So we officially went live just over 24 hours ago. We went live with 7 different trading pairs. And this is it's a big step in the right direction for us, as I'm sure all of you guys on the call and certainly some of the listeners know. We've been derivatives focused for essentially the entirety of our existence, and the market's evolved, and people expect kind of a more holistic product suite in order to to satisfy all their trading needs and all their crypto needs. So this has been in the pipeline for quite some time. We've been working on this for, I guess, just over a year now, and pretty extensively over the last 6 months, particularly. And it's been a pretty intense effort on our part. We're super happy with the initial response. We've done just over 10 million in trading volume just in the last 24 hours to kick things off, and we got some pretty lofty targets for the rest of the year. So things are good, especially considering that we're very likely about to enter into a multi-quarter bear market, and I think we can all agree that trading volumes are probably not going to be where they were over the last few months in the near future. So yeah, that's I guess that's my little intro piece.
Yeah, Jenny, when did you join, for listeners? Like, when did you join BitMEX? Because I really wasn't around during the kind of the glory days of BitMEX PvP derivatives. But for those that aren't aware, I believe that BitMEX was the first perpetual swap contract.
Yes.
And so that was, that's obviously super dominant in Bitcoin markets, crypto markets more broadly. And that innovation is something that, the world's never seen until kind of BitMEX in all of its glory kind of dropped that. So if you want to talk maybe a little bit about history and what you've seen, it's kind of, interesting to dig into.
Yeah, sure. So yeah, this is always a good topic to riff off. So we actually launched the perp, the first perp with it was a ETH XBT perp, and if I am not mistaken, it was May 16th, 2016 that it launched. So pretty early relative to where we are now. It's insane to think we actually just crossed the 6-year anniversary, I guess, a couple of days ago, and it's the most liquid instrument on the market right now. And obviously a lot of our peers and competitors have definitely copied the structure and have really kind of they've dived into the world of perps a little bit deeper. So it's been a ride for us. We saw a lot of early success in the 2017 to 1920 era. I think BitMEX was kind of synonymous with that era. That's kind of when the real degen trading memes started to come out, was during that 2017-18 era. And obviously all the wrecked and liquidated memes started coming out around then, and before that it just didn't exist, right? Like we essentially kind of birthed that whole subsegment of the market. And perps and just futures in general have become a important trading instrument and part of the market microstructure for everyone, right? Very large market makers, traders, from retail all the way to institutional, use these tools and these products in their trading strategies. It's a staple, right? And before we rolled it out into the market, it just didn't exist. There was no way to hedge out a position. There was no way to run a basis trade, right? So, from that perspective, we were definitely the first, and we really brought this thing to life, and it's taken on a life of its own. And look, like I said, we're excited to pivot into new product offerings, and spot is really just the beginning of this. As far as my own background, I've been at BitMEX for about 1.5 years. Originally started out focusing on kind of general business development efforts. And then, when we rolled out our strategy to go beyond derivatives last year, I saw this as an opportunity to, parlay some of my previous experience into making this real. So, fingers crossed, it worked out pretty good so far, and we're hoping the rest of the launch period is going to be just as successful.
I saw, and I don't know if this is true, I can't verify, some of the, like a lot of the data sets that I look at with volume and derivatives don't go back, but I'm pretty sure during the 2018, 2019 kind of bear market, especially around like the 3K level, BitMEX perpetual swaps were doing more volume than all of the spot exchanges, maybe combined. Maybe that's completely off, but yeah. I just know that the volume on those contracts was just insane during a period where there was not much interest in the industry. It was just kind of trader PvP. Exactly. Those are the glory days.
Yep. Yeah, it was. Listen, bear markets create weird structures for people to trade in, and the 2018 bear market was it was very specific. So not surprised to hear that we had a pretty dominant, let's say, control as far as people just trading perps and not wanting to touch spot at all. That tracks pretty well.
So here's a curveball question, and I'm not sure. Not even speaking about BitMEX itself. What do you think about the United States and the odds of a perpetual swap contract coming to market? Obviously, our regulation is not too favorable. We can't even get a spot ETF, so maybe asking for a perpetual swap contract is, unrealistic. But just given how much interest there is overseas, really around the world, for these instruments, especially as Bitcoin gets more institutionalized, do you think we get one? And do you have any maybe info that you can share?
Yeah. So look, I think in general, the regulatory landscape is, I think we can all agree, quite complicated, and it's a patchwork across multiple jurisdictions, and it's very I'd say it's very dicey at the moment as far as regulators trying to push these things through over to retail. It's really hard to sit here and have kind of a positive outlook on that, especially given the events of the last week. And of course, a lot of what happened in the last 7 days is, it's centered around, the implosion of Terra and Luna and the UST stablecoin. But, these sort of things tend to have a pretty negative spillover effect into the regulatory environment in general. I don't want to comment too much on U.S. regulations. First of all, I'm not an expert, and I'm probably not the most qualified, but just from my own personal perspective, just given what I know and some of the stuff that's happened over the last little while, we have obviously FTX US is trying to push for this, and they're trying to get their approval from the regulators to be able to list perps for retail access, and just taking a step back and looking at what they're up against, or what any other company would be up against in trying to get this pushed across the line, you're really fighting legacy regulatory infrastructure, right? Like they're like the CFTC and all these regulators, they have certain structures in place to help kind of promote the current version of things, right? And it's not just for for perpetual swaps and futures, it's just in general, right? Just for commodities trading and asset trading, they have particular structures to preserve what's there now, right? And, it's going to take, I think, probably a little bit more time to kind of get people on board with being comfortable, especially serving these products to retail, and never mind any discussions of leverage trading, and certainly not 50x or 100x, or anything that could be misconstrued as, betting or gambling. I don't want to use the G word because, sometimes that makes people uncomfortable, but that's, that's the truth, right? It's going to take some time. And I really do think the events of the last week might have certainly set us back probably quite a bit.
Yeah, I don't know if anyone on the team, Chris or Q, have a direction here, but Jenny, we were talking on the phone this weekend about just the craziness that happened and some of the blowups. I don't know if you want to dig into that a little bit, talk about what you're seeing on your end, some of the second order effects, because obviously, Bitcoin specifically, they dumped a few billion. Luna, Luna went to zero essentially. UST blew up. But I don't think people understand what's it called? The Ponzi. BitConnect is pretty infamous, but this whole blow up was an order of magnitude larger, on the scale of 50 billion or so from its peak. And so just in terms of liquidity in an environment where the legacy system is already deteriorating, it's obviously pretty large. What are your thoughts on all of it?
Yeah, I mean, listen, there is so much to unpack in this particular topic. I mentioned to you a couple times, I'm writing a piece that covers a lot of the relevant points on this, but I'll touch on the ones, the relevant kind of variables here that I think are worth discussing. I won't get into on-chain analytics or any of that sort of stuff. There's way more qualified people than me that have already written exhaustively on this, but I think realistically, what we have is probably this is the most catastrophic implosion ever, period. Like, just from a numbers perspective, I think it was like 59 billion from the peak market cap exposure on UST and Luna, that just essentially evaporated, not overnight, but over a course of several days. And this it's not like these implosions happen in isolation. They happen in relation to everything else in the space, right? The amount of contagion from this incident it's actually impossible to measure right now, because it's still happening, right? There's all sorts of things that are playing out in real time as a result. And to be honest with you, I don't think we're going to know the full extent of the repercussions until probably several months down the line. And I've had this discussion with a number of people about the fact that we're going to have a lot of dead bodies washing up on shore over the next little while. And some people might be surprised as who was aggressively affected by this. I don't have any let's say definitive information or objective facts on who got impacted or who blew up, and even if I did, it certainly wouldn't be my place to talk about it. But as far as rumors and hearsay are concerned, there's definitely a lot of chatter about certain prop desks taking 9-10 figure losses, certain market makers, definitely a lot of hedge funds that were involved in this, and and these are just facts, right? Like, Laura Shin actually had a great tweet a few days ago where she took a screenshot of all the funds that were invested in the early Luna rounds, and it's a pretty exhaustive list. There's a lot of names on there, a lot of big names, a lot of folks that run a lot of numbers in funds, and so this is going to have massive ripple effects. I think realistically, the one thing that we should be very concerned about over the next little while is really trying to understand why so many people champion this, and either and this is not I'm not naming and shaming, I'm not trying to throw anyone under the bus, but let's discuss this honestly and objectively. Why did so many people either overlook the very real existential risks with Luna, or was there not enough due diligence done in the process of deciding to invest in it and promote it and be a part of it? So I think those are kind of the big questions. I mean, like Novogratz has a Luna tattoo, you know, and not to call them out specifically, but like, you know, this is the type of stuff that happens in these very like euphoric mania like cycles in crypto. And, you know, we've seen different variations of this over the last couple market cycles in general. But, you know, like that's that's a pretty committed, you know, that's a pretty committed act, is to, you know, to tattoo your investment on your arm. And, you know, listen, you know, again, no offense to Novogratz, you know, big fan, but, you know, it's things like that. And then, you know, that gets circulated, you know, retail sees this, right? The regular average Joe sees this and like, hey, whoa, Novogratz is invested in this. Like, I got to get behind this. Right. And then you have, you know, a series of other people that were involved that really champion this. And, you know, ultimately it blew up in the way that it did. And, you know, and the people that I feel bad for the most are absolutely, you know, retail investors and certainly the people that were building in the Luna community, of which I've spoken to a few. And there's a lot of really great founders and really great projects in that space that, you know, like they're kind of fucked now, right? They have to figure out what they're going to do next. They got to figure out which other chain they're going to go to, or, you know, what next project they're going to focus on. So, yeah, the repercussions of this are quite bad.
I think just in terms of, you know, there's been a lot of crypto projects, if you want to call it that have just, you know, gone to zero or gone down 90%, 95%. You know, that's in this industry for better or worse. That's almost standard, right? We've seen it happen over and over again, cycle by cycle, just the stuff gets wiped out. The craziest part in my mind, and why this was, you know, potentially the most damaging, was there was $18 billion of UST, which people thought was risk off, right? Like there was, you know, e-banks and, you know, that obfuscated, you know, that were paying, you know, 16% interest, that people thought it was just, they were somehow getting, you know, dollar yield, right? There was all of these products, there was treasuries, there was funds that were, you know, looking at this crappy macro environment and thought they were risk off. And then the portfolio just got, you know, nuked. And so I thought it was pretty interesting that after this whole event, you saw all of the, you know, all of those alts, all the layer ones that, you know, all the crypto investors were excited about in 2021, down 35%, almost directly after, right? And to me, that was just like almost like a mass liquidation event, not from like the traditional derivatives unwind, which we see in crypto all the time, but a liquidation event in, you know, you sell any spot bag you have because you just took a huge, you know, mark to market hit on something that you thought was a dollar risk off trade. And so, you know, I think I agree with you in the sense that we haven't, you know, really got to the bottom of all the impairment and potential insolvencies. You know, we saw, I tweeted about it, don't want to make any accusations, but stuff like Celsius, right? Yield products. For anyone that's, you know, not aware, these yield products, whether it's BlockFi, Celsius, whether it's just your traders themselves, funds, you had in 2021, you had this massive GBTC arbitrage where you could redeem with GBTC. You know, you get this trust trading way above net asset value. You wait 6 months and you can hedge out, but you wait 6 months and basically you capture this neutral yield of whether it's 10, 20, 30%. After that kind of premium closed to zero, you still had a futures market that was trading on an annualized basis, 20, 30, 40% above the spot market. That's all gone. And so in the crypto ecosystem, there was like not many things that offered you a quote unquote, you know, risk-free yield. But what did people turn to? They turned to the Anchor protocol and that UST trade. And so all these yield products, like I don't know how BlockFi or Celsius is promising the USDC yield. I don't know. But certainly, and we saw this on chain, and apparently they got out of a huge position.
They did. It was like they I think they withdrew something in the order of like half a yard, 500 million. And honestly, to their credit, they did it quick enough. I mean, we don't know what other effects there might have been, but I mean, they preserved that chunk at least.
And so, you know, I certainly wouldn't want to have, you know, never mind having your coins on an exchange, but having coins in a yield product, especially, you know, Bitcoin, where it's tough to get a native yield, right? Especially if it's like anything that's above 1%, you know, they're definitely rehypothecating, doing some shady stuff. And so, I think, you know, potentially we're going to see some announcements like, oh, you know, they took a big hit. it was interesting to see Novogratz letter today.
I
addressing
actually
all that.
I didn't even see it. This is news to me. What did he touch on in the letter?
Yeah, I mean, he basically it was kind of was like it was a little transparent, somewhat cope in the sense that he blamed the macro environment and the liquidity tide for the implosion, which I guess affected the market in general, but it wasn't really a sustainable mechanism anyway. And then he said lesson number one, take profits along the way. Galaxy Digital did, and it was like I don't. It was just a weird letter because it's like, oh, okay, you took profits, you tattooed a Ponzi on your arm and then sold it while retail got liquidated. It was just a bad look in general, I think.
Yeah.
And what do you think about in terms of the regulation from the stable coins? Do you think that's coming?
Yeah. So this is another one of the things that's one of the interesting elements out of this whole debacle is, look, the stable coin subsegment of the space has been, it's been the topic of discussion for, with central banks and regulators for a long time. This didn't just start yesterday or last year or the year before that. This has been it's been in the pipeline for a long time. I actually I'll give a shout out to my old team. I used to work with a company called Stable Corp. We launched the first Canadian dollar stable coin in 2019, and even then we were quite involved in trying to understand the regulatory landscape, and not just in Canada but globally. And look, the prevailing wisdom is that right now we have these private market stable coins. For the most part, the market cap is dominated by the fully reserved stable coins like Tether and USDC. And then to a lesser degree, there's, you have some of the algorithmic ones. And so that's kind of the structure of things right now. Where the rubber meets the road for regulation specifically. And again, I'm not an expert. This is me just kind of riffing off the base knowledge that I have. The reality is it's going to come down to, are banks in general going to be comfortable taking in these deposits for stable coins? That's one of the biggest elements, number one. And then also, how are these private market stable coins going to be competing, generally speaking, when all of these countries that are now running pilots for CBDCs, what is that relationship and what is that dynamic going to look like in the future? And I think you and I can probably both agree that CBDCs are probably not a good idea. And just again, personally speaking for myself, seems like a extremely slippery slope to walk down. And there's a lot of potentially harmful impacts that can come out of that, especially if there's no built-in privacy mechanisms for these things. We're essentially looking at it at the worst possible level. It could be, a dystopian panopticon that tracks all of your movement and your transactions and can, it can have all sorts of negative second-order effects. So the real challenge, I think, over the next little while, over the next several years, particularly, it's going to be to see how the massive private market stablecoins that exist right now are going to interact with what will inevitably be a push on the CBDC side. So I'm excited to be honest with you, because I think this is going to be an epic battle, and I think there's going to be a lot of interesting things that come out of it. I'll be sitting with my popcorn ready to watch this thing go down, but it's not going to be a dull moment. Let's put it that way.
I'm curious for both of you maybe to share, because we're talking on the regulatory side of things, but there's also like a consumer sentiment where maybe people who are not as well versed in the Bitcoin space, maybe look at something happening like the Luna debacle, and then they're further validating their fraud or their belief that, hey, this is too volatile or whatever. What are some of the hurdles on the more sentiment side that you're paying attention to and ways to just get over that hump?
Yeah, I mean, personally, I've kind of always repeated the message, for better or worse, to just my regular friends, family, that there's Bitcoin and crypto, and you can, if you want to kind of throw some money in the shitcoin casino, that's fine. but it's just a different trade-off. And I think Bitcoin is here to stay. And a lot of the other ones have some question marks. And so, it wasn't a specifically like, should I buy Luna thing? But for instance, like my dad, I was like, yeah, like Dad, when I'm telling you that there's Bitcoin and crypto, this is kind of one of the examples. And not everything's going to go to zero in a span of 24 hours. But really it's, people are experimenting. Like, for instance, did everyone look at Vitalik's thread 2 days ago, yesterday?
Yeah.
About like, that's interesting, right? And so, the Bitcoin maxis have their talking points, right? And everyone just in the crypto space kind of rolls their eyes and says, it's those biased maximalists. Okay, fair point, but why are they so toxic, and why are they beating the drum on a lot of these things? And I think directionally they're really correct. And could the messaging be better at times? For sure. But when you have the founder of Ethereum saying, hey, all these things that we promised, like they come with trade-offs, and we're just kind of winging it on the fly, right? And so, in terms of the consumer, or not the consumer, but in terms of the average retail investor, the sentiment queue, your question, kind of dancing around it a little bit. But I think what comes out of a lot of this stuff, out of the depths of this bear market, how low we go, how long it takes is anyone's guess, is going to be that, okay, Bitcoin's still ticking block by block. Legitimate energy companies are getting into the mining industry. This thing's here to stay, and no one can do anything to stop it. A lot of this other stuff is, still up in the air, whether it's stable coins, DeFi, DEXs. It's interesting. And honestly, like the anarcho-capitalist in me is, saying, go build it. I don't want Gary Gensler to come stomp on anyone's throat. Like, that's not what I'm rooting for here. But the whole decentralization, right? Like Luna UST is decentralized. Is it though? Right? Like no. Ethereum. Is it though? Like decentralization theater is one thing. Actual decentralization is another. I think that's, going to be probably one of the bigger themes coming out of, the next year, the past 6 months.
Yeah. What I'll say on this point is, I think just as a boilerplate talking point and not financial advice, do your own research disclaimer. I think everyone should very much start with just owning Bitcoin and understanding what it means to own Bitcoin, what it means, to transfer assets off exchange into a wallet, to manage your wallet, to manage your seed phrases, all the basic stuff. So, this is always my first piece of advice, is for everyone just do the basics, like understand the basics, understand what you're getting into, understand how to manage it and move it around. And, especially in these like extremely uncertain and volatile times, it's no time to be experimenting and throwing your attention and money into experimental projects. And, this is one of the things also, just to bring it back to the Luna debacle, which I feel like we're going to keep coming back to it throughout points of this conversation. But one of the things that I think is interesting about the entire situation is that, if you really look at how it was structured from an architecture perspective, it was an under collateralized stablecoin, right? It wasn't even 100% collateralized, right? It wasn't over collateral. It didn't have the full reserves, right? And then, you kind of add into this, the fact that they started up buying AVAX and Bitcoin, and then you introduce all these, additional structural risks into the entire project, where you have a tail risk event that happens, and your reserve assets drop 20 or 30%. Like, what the fuck do you think is going to happen? Like, it's pretty clear there's going to be an unwind, right? So, just to land the plane here, what I'm trying to say is the thing itself was highly experimental. And listen, you got to give respect to, to people trying new things, for sure. And, experimenting with complicated financial technology, it does take a lot of balls, especially to do it out in the open. And, you got to give a little credit where it's due, but, it was inherently a risky thing, right? And it was inherently risky to invest in from a VC level, right? Never mind at the retail level, where most people can't stomach those type of losses, where, a fund can take, a 9-figure hit and not be insolvent. A lot of retail guys can't, take the, 4 or 5-figure hit, without it impacting their lives materially, right? So just to bring it back, just buy some Bitcoin, right? Understand it, learn it, own it, learn about it.
Yeah, it was pretty sad seeing some of the kind of like post Luna crash. It was sad seeing some of that stuff. And to not, I mean, not going to sit here and talk like Bitcoin isn't 50% off the highs or whatever it is, but Bitcoin's not going to zero, right? Even if it goes down to 20K, even if it goes to 10K, this thing's not dying. And I would, with a lot of confidence, I'd say we're going to see new highs at some point, whenever that comes, right? So simply just being in the market, holding it. I mean, honestly, for like most people, it's best like to just buy some Bitcoin, whether it's on an automated basis, whether it's once every 2 months. Like, don't even look at the chart, right? Like, obviously, we are like I look at charts all day, like I'm looking at data, etc. But most people, like, put it's your decade-long savings account, put it away and forget about it. And you can't do that with Luna, right? Like one of the examples I saw that kind of blew my mind was, and I'm not trying to take any shots, but it was Raul, Real Vision's like co-founder. I don't even need to name his name, but Raul was hyping him up for nailing the Luna thing, and then it crashes to zero, and it says I had 100% I had everything I had in this, and I didn't take a single bit of profit on the way down because I didn't want to add selling pressure. And it was like, oh my God, like that is horrible. Like, never mind the fact that you didn't even recoup anything, but like you're the head of investment research and you had 100% of your money in a Ponzi, and then you like a Ponzi that you self-identified with on Twitter, which is like the worst part, right? Like you lost everything financially as well as like you lost your social identity. Like, oof, right? And so maybe it's just a warning for future altcoiners, or maybe like NFTs, right? Like you have 100% of your savings in NFTs, like a liquid JPEGs. I think we're going to see a lot of.
Sorry to interrupt you. I want to go down this path, and it's worth pointing out that like all those NFTs, like Jack Dorsey's first tweet that was sold for an NFT, or a couple others, are literally being sold for 99% off on like their current auctions. So you're already seeing the floor fall out of the NFT. Sorry, I just wanted to bring up that point and also remind everyone on Twitter Spaces, you can see Dylan's beautiful face on YouTube if you just click the link, swipe all the way to the right.
Yeah, I mean, not even specifically NFTs, not even specifically crypto. I think you're seeing a lot of dead bodies float to the shore everywhere. You're seeing it. You're seeing it in the stock market. Zoom, Peloton. All these tech companies that aren't actually tech companies, all these SPACs, all the garbage from the last 3-4 years. I mean, really the everything bubble of the last decade, but specifically post-COVID, all that stimulus funny money, you're seeing all that get washed out. And a lesson for a lot of people is that because something's 80% down doesn't mean it's a good purchase. 80 something, the difference between something that's 80% down and 90% down is another 50% drop. The difference between something that's 90% down and 95% down is another 50% drop. And so a lot of hard lessons going to be, I think, are going to come out of the next couple of years. And for anyone that's, buying Bitcoin and is underwater, I like to look at the drawdown chart, throughout this last 10, 11 years. Everyone likes to think I would buy Bitcoin and be rich. The reality is that, anybody that's actually materially rich and was early to Bitcoin had to sit through multiple 80-85% drawdowns, not multiple, like 3. And then, after those 80%, you had to live through 3 or 4, 50% drawdowns. So just have some patience, make sure that your conviction isn't just off looking at a chart, and that you fundamentally understand why you own what you own. And if you don't understand why you own it, then maybe reevaluate. I'm not just talking about Bitcoin, but really any asset.
Yeah, I think one thing I'll add to that is, I have this like funny anecdote amongst some of my extremely early adopter friends. I mean, I've been around this stuff since 2012, 2013. So I've lived through a few market cycles. And, the funny thing is, some of my peers and friends that have fared the best throughout this entire time are the ones that either accidentally, didn't touch their assets, or purposely locked it up away so that it's not on an exchange. It's not anywhere close to an exchange. It's just in cold storage and they don't touch it. So over the long term, like realistically, the best strategy is set it and forget it. Don't be obsessively checking your portfolio. Forget about the price. Like you said, Dylan, like know why you're buying it, right? This isn't just like I'm going to invest and, and constantly keep track of the price and, what's my ROI? It's no, like there's a philosophical undertone. And, that's something to always keep in mind, particularly, when it comes to Bitcoin.
Maybe this is just bear market cope, but yeah.
No, listen, I don't think so, because this isn't like, we shouldn't just be saying this during bear markets, right? And it's a lot easier to say it during a bear market because it feels like a cope, because we're trying to console ourselves, right? And you're down from your peak net worth and all that jazz. But this is a sentiment that should be reiterated during other times as well. So I stand by it.
100%.
Dylan, I want to ask you, I guess this is pseudo from Greg Foss's mouth, but like, how are you doing in this market turbulence? This is what, your first real bear market, if I'm not mistaken, out of your high school days. So how are you feeling?
Well, I mean, I was not Bitcoin, but I was trading my small amount of personal capital in March 2020. And the bear lords and doom lords on Twitter had me YOLO my entire non-Bitcoin net worth into SPY putts. So that's like no, it was a 1-2 trade. It was everything into SPY putts, those 4x, and then I YOLO'd into Bitcoin, which went parabolic. So that was the best two trades of my career. Right now, I mean, I'm sitting in a Bitcoin stack. Might harvest some capital losses soon if we get at the lows, just for tax purposes, just over the last year or so. But feeling fine. Have a stack of cash. Short some garbage. Like I've been short some garbage alts. I mean, I don't recommend like trading and all this stuff to everyone, but I look at this stuff all day. Also short some tech and long volatility, but I think that before the end of this all, I don't think we, the pivot, the soft landing isn't going to be so soft. And I think we still got a while. I guess maybe it happens, faster than everyone thinks, but, credit volatility, that's the name of the game right now. And it looks like it's all deteriorating still, right? So I think they're going to have to crush demand. We're going to have to see a pretty large recession and a lot of blood to get inflation down, which is what they're saying, right? The biggest money in terms of markets, maybe not so much Bitcoin, but it's Bitcoin's as interrelated as ever. The biggest money is made from a macro level on central bank policy error. And right now, the policy error is they inflated the bubble far too large. They injected way too much stimulus, and now inflation is the biggest political issue in every jurisdiction on the planet. And if it continues to accelerate, there's going to be, the plebs are going to revolt. So they're going to do everything they can to get it down. And so I think what that means is it means pain for assets. The average American, really, never mind American, but really anywhere in the world, don't own any assets. And they're wondering why bread and gas and, their meals are more expensive. They don't care that the S&P is down 5%. And so that's my thoughts. I mean, I could be wrong, but directionally, I think that's what's happening.
You know me, I could spend hours with you going down that rabbit hole, but I won't do that for this week. At least we'll let you get settled back from your Euro trip-esque adventures. Genia, I wanted to let you have the opportunity to maybe touch on anything else that BitMEX is working on that we haven't yet had the chance to gloss over today.
Yeah, sure. So I think, I'll take a moment just to kind of just to plug Spot one more time, just for a few seconds here. So I think one of the most important things to highlight is it's not just the launch of the Spot exchange and and all the various assets you can buy on it, but I think particularly given kind of market conditions, this next piece will be interesting for for the listeners. We are running a $1 million giveaway over the next 60 days in order to obviously to get the word out, to get people excited and hyped up. And one lucky person is going to win $500,000 in Bitcoin as a result. And so the way that we're doing this is we're running a sweepstakes. And the way you enter the sweepstakes is you have to trade. You get one ticket into the sweepstakes for every $250 notional that you trade on the exchange. And I think there's a maximum of like 10 or 15 tickets per user. And we're running this for 60 days. And then on July 17th, we're going to draw 55 winners. One winner, like I said, is going to win $500,000 in Bitcoin and a custom AC Milan jersey. We have an assortment of other pretty amazing prizes, including block clocks. We love Rodolfo and the CoinKite team, so we want to support them. Cold cards. We have a long-term partnership with Safedine, author of the Bitcoin Standard. So we're going to give away some signed copies of the Bitcoin Standard and the Fiat Standard, and a whole number of other prizes that I think a lot of people are going to be they're going to be into. So that's the big thing that I wanted to highlight in our discussion today. So get started. Trade as much as you can. Obviously, get as many tickets into the sweepstakes, and who knows, you might be the lucky person that walks away with $500,000 in Bitcoin. That's the big thing for us right now over the next little while, and then looking out a few months into the future. Our next big launch is going to be our fully redesigned mobile app. So last month we actually released a light version of this. In July we're going to be releasing the fully featured mobile app where you can do everything from our yield products to spot trading to derivatives trading, and you're going to be able to use our fiat on ramps in the app as well. So we're super excited about that. It looks fucking awesome, and I can't wait for you guys to check it out. It's a fully redesigned experience, and it's going to be great. And I think obviously looking out further into the year, we're looking at a number of other things. We're going to be launching an OTC desk to complement the spot offering as well. And there's a few others that I can't talk about yet, but I'm sure we'll tease on some of these future live streams. So it's super exciting for us. We're definitely looking to obviously to kind of reignite the retail interest, and I think if the last 24 hours are any indication, then we're in a pretty good position for the next little while. So yeah, that's our trajectory for the next little bit.
I have to ask because probably I'm doing something wrong, but every time I try to go into BitMEX, I apparently am in a restricted jurisdiction. You are. So look, I mean, obviously, have to touch on this. We don't serve U.S. clients, and it's a pretty real restriction right now. No U.S. persons at all. So I guess out of our listeners here, if you're trying to access BitMEX from a U.S. jurisdiction, it's not going to happen, and unfortunately we can't onboard U.S. clients right now. We'll see how that goes in the future. It might change, might not change. That's not for me to comment on right now, but right now it's one of our restricted jurisdictions for the time being. There are too many things to unmute on this. Dylan, we are about to wrap up here. I want to give you the opportunity to touch on anything that we haven't had the chance to discuss this week, and just know next week I'm coming at you with so many questions. You're going to hate me.
Yeah, I mean, I think I've kind of touched on most of the things at the top of my mind. Guess I'll just give a shout out to what we're doing at Bitcoin Magazine Pro. If you want to check it out, it's in my bio. We put out daily content on everything happening in the markets and that we talked about. So yeah, check that out.
Yeah, absolutely. It is my number one source of analysis. I do not read anyone else's newsletters. They do not matter to me. It's Dylan's, and that's it. So just for anyone who hasn't had a chance to read it, please do check it out. We're obviously very, very happy to get to be partners and sponsors of this. So there's a reason why we chose this over other options. So it's definitely the best out there. I did want to ask Dylan one question before we wrap up. I guess given the last week and all the various drama that's played out, and kind of global macro environment. What's your outlook for the rest of the year?
Yeah, I think Bitcoin's holding up pretty well from a derivative standpoint. We're looks like it's been pretty risk off for a while. So really like the volume on that kind of dropped to 25K. 25K on Coinbase. That was the biggest volume that we've seen since the May liquidation last year, May 19th, I believe. So when you want to see bottoms, when you want to see kind of turning points, inflection points in the market, that's what you want to see. A ton of coins changing hands. Really, I think in terms of Bitcoin trading, in terms of the price action, it's all about the denominator right now. And basically, Powell's telling you that the USD denominator in BTC USD is going to go as high as it needs to go to get inflation down. And so that's the market we're living in, for better or worse. We're in the hands of some old man in the suit. But I think eventually Bitcoin changes all of that. But for the time being, that's the outlook. I'm happy to DCA. Also got some dry powder and limit orders set. For anyone that's panicking, I would just say don't risk more than you can afford to lose. If you're using leverage, whether that's mark-to-market perps or collateralized loans, anything else, prepare for worst case scenarios in your head. Right? Don't continue to double down, because the worst thing that can happen is you become a forced seller. So yeah, this is just nothing but a thing. Bitcoin is extremely volatile, and it's going to continue to kind of seek max pain like it always does. And so I'm happy, honestly, as a 21-year-old, that stocks and Bitcoin and everything else are going to hell, because I want to scoop up some more assets. But obviously, everyone has different time horizons, and we'll see what happens.
Genia, Dylan, thank you so much for joining us today. Guys, we're going to wrap the episode here. Spaces, bye. Everyone on YouTube, thank you for tuning in today. We hope you enjoyed and learned a ton about mortgages, about everything BitMEX has going on. We hope Dylan didn't scare you away despite having such a bearish outlook for just the world. But obviously, and goes without saying, guys, go get your tickets to Bitcoin 2023. Tickets are on sale now. You can still get the lowest available tickets available through Bitcoin only. You can't buy with fiat anymore for those ticket prices. All ticket prices will be going up on Friday. Lock in those tickets now and use promo code FOMO to get 10% off of everything in the Bitcoin Magazine store. That's a wrap. Stay humble. Stack sats. We'll see you tomorrow.
Cool. Thanks, guys. Take care.